Good morning. We have a quorum and we have reached the appointed hour. The first item and agenda item number 1, information paper is due since last meeting. There is only one, and it's on the agenda. Item 2, date of next meeting and items for discussion. We'll have our meeting in March. The administration has proposed 2 items for discussion. The first is the second stage of public consultation and establishment of effective resolution regime for financial institutions in Hong Kong, and 2, review of the adjustment mechanism for minimum and maximum levels of relevant income for MPF contributions. Do members agree to discuss this in March? And let us invite Professor K.K. Chen to brief members on the Chief Executive's 2015 policy address. Please invite officials into the room. Members who have signed up to ask questions, Mr. Jeffrey Lam, Mr. Wong Kwok Hing. I also welcome other members asking questions. May I welcome the Secretary for Financial Services and Treasury and his team for attending our meeting. I would Professor Chen brief us on the policy portfolio of the SFTB. I'm glad to attend today's meeting and brief members on the policy initiatives of the FSTB. The external economic situation is this. Europe, United States and Japan, their monetary policies are moving towards different directions, and there is uncertainty of the economy of Russia. These have provided uncertainties to the international financial markets. The IMF, in its financial sector assessment program, recognized Hong Kong's strength, Hong Kong's resilience, but we will not be complacent. We'll monitor the development of financial markets and take suitable measures to ensure the sound operation of our financial systems. As for promoting market development, we have been working very closely with the market to promote the development of financial markets, improve quality of our markets, and maintain a suitable balance between financial stability and market development. We'll continue to strengthen our cooperation with mainland in terms of the financial sectors and develop and continue to expand our role as the Center for Renminbi. The Stock Connect has promoted the connection of 2 markets and opening up of the renminbi market and internationalization of renminbi. We've also enhanced Hong Kong's status as a national financial center and offshore renminbi center. This is a mutually beneficial arrangement. We'll continue to talk with the central ministries on stepping up Stock Connect, including Stock Connect between Hong Kong and Shenzhen, to provide plurality in our fund management platform and strengthen our leading status as an asset management center. We propose the introduction of a new open-ended fund company structure to enable more funds to register in Hong Kong. And in the first half of this year, we will table the LegCo to expand the tax waiver for offshore private funds, so that there will be more offshore private funds coming to Hong Kong. Last year, the budget also proposed to waive stamp duty for transfer of ETFs. The relevant bill will have its second reading resumption. With the passage of the bill into law, the exemption will be gazetted on the same day, and that will help to promote the development, management, and transactions of ETFs. As for plurality in products and services, we are considering ways and means to encourage the setting up of corporate financial centers in Hong Kong, and we'll continue to promote the development of funds or bonds so that bond issuers can be facilitated to issue bonds in Hong Kong. As for enhancing financial market infrastructure, we are committed to introduce scriptless system to promote the overall effectiveness of our securities market and enhance corporate management. We thank the support of the Bills Committee, in particular Chairman. The study of the scriptless trading bill has been completed, and we will arrange for a second reading of the bill as soon as possible. We will also introduce an amendment bill to authorize the HKMA to regulate retail payment system and store value payment system so as to enhance the acceptability and confidence of these products. Enhancing market quality and enhancing investors' confidence are the important tasks of Hong Kong, of the Bureau. We have already embarked on enhancing the bankruptcy procedures and litigation procedures, enhance the protection of creditors. We have reviewed the abscondee regime under the bankruptcy ordinance, and we hope that in this legislative session we can table the relevant bill. As for insurance regulation, we have introduced the IIA, Independence Insurance Authority Bill, and we hope that in the middle of this year the bill can be enacted into law, and then we will move on to prepare for the setting up of the IIA. The regulation or the change is to enhance the regulatory system so that it can be in line with international standards, promote the stable growth of the industry, and to provide better protection to policyholders. And we are also establishing a risk-based capital regime for insurance companies so that their capital requirements are in line with the risk they bear, and that's in line with international practice. We did consultation last year, and we will conduct quantitative impact study, and then there will be another round of consultation on the detailed rules. The G20s, with regard to the G20's measures, before the end of this year, we will submit to this Council a system that is suitable for Hong Kong, and that is for the disposal of financial institutions. And we are now doing public consultation. And for the OTC derivatives market, we have established a regulatory framework to introduce the mandatory reporting, clearing, and settlement arrangements, and introduce the record-keeping duties. We'll continue to follow the Basel timetable for implementing Basel III Stage 2 for the stabilization of banking system. We introduced liquidity standard and also buffer capital requirement in January, and we've implemented the relevant disclosure requirements. As for auditing, there is a trend of getting independent auditors, and we are talking to the relevant professional groups and also the Financial Services Development Reporting Council. And we have consulted the public last year, and we are now drawing up the detailed proposals. As for MPF, we are working with the MPFA to enhance transparency and competition. They will put emphasis on the launching of core funds as the default arrangement for MPF schemes. As for international tax cooperation, we'll continue to work with other trade partners for the negotiation and entering into CDTAs. In response to the OECD's AEOI, or New Global Standard on Automatic Exchange of Financial Account Information, in November last year we reported to the panel our target is to work out the specific legislative proposals in 2015, and we will table the bill in 2016. Financial services industry is a very important pillar of our economy. It accounts for 6% of the working population, or 240,000 jobs. We will to continue to enhance our financial infrastructure and market quality. We'll capitalize on the opportunity of one country, two systems, and enhance Hong Kong's status as an international financial center and Hong Kong's competitiveness. Thank you, members, and I'm happy to take members' questions. I open the floor to members. 4 minutes each, questions and answers. Mr. Jeffrey Lam. Chairman, I have several questions. I believe you have done quite a lot of calculation of the revenue. Will there be a great increase in tax revenue, more than you have expected? The Stock Connect, Shanghai Hong Kong Stock Connect, has been introduced for 2 months. At the start, the situation was not very favorable. What is the current situation, and will there be any improvement measures? You mentioned Shenzhen Hong Kong Stock Connect. Is there a timetable for implementation? The FS says that the link exchange rate is an important cornerstone, and we don't want it to harm us. We've seen rising US dollar and falling renminbi. In terms of the Hong Kong dollar exchange rate, Hong Kong is pegged to the US dollar. Will that affect your policy? The stability of what is the impact of the stability of the renminbi on your policy? Thank you for the question. With regard to this year's surplus, you have to wait until the 25th, and he will give you a full account on that. We'll make good use of our surplus. Anyways, as for the Stock Connect, the progress of the Stock Connect is very smooth. At the start, the market was of the view that the usage of the quota was on the low side. When we set the quota, we didn't want the market to stop transactions because of the limits of the quota. Now we have seen that the Stock Connect is progressing very smoothly, and the transactions are going on very smoothly, and we can see investors on both sides of the border have got used to the operation of the Stock Connect, and we've seen an increase in the transaction volume. The Stock Connect is a pilot scheme. At the start, we expect that it can progress step by step, and there have been enhancement measures. Say, for example, short selling, the introduction of short selling. There are also other improvements to facilitate investors to deal with the issues they've encountered. As for bigger improvements, we are considering them. The first step, of course, is to implement the Stock Connect. In respect of linking the information systems of both sides, and we can enhance the range of products for the Stock Connect. This will facilitate investors on both sides to make good use of the system. The Shenzhen Hong Kong Stock Connect is now under preparation, or just thinking about it, is under preparation. The Shanghai Hong Kong Stock Connect and Shenzhen Hong Kong Connect. Shenzhen and Shanghai are big stock markets in the mainland. After the Shanghai Hong Kong Stock Connect, the next, of course, is the Shenzhen Hong Kong Stock Connect. We are still working on the details. I will do it step by step. There will be the launching of the Shenzhen Hong Kong Stock Connect, and there will be improvement to the Shanghai Hong Kong Stock Connect to make it more popular. As for the exchange peg, can I answer the question? The peg, or the cornerstone, or the magic needle that stabilizes the turbulent sea, as the Chinese saying goes. Now, after the financial crisis, we rely very much on the dollar peg to stabilize our market. Now the U.S. dollar is very strong, and that raised the exchange rate of the U.S. dollar, the Hong Kong dollar. Under the peg, we are able to cope with the situation. Thank you. Next, Mr. Wong Kok Heng. Thank you, Chairman. I have two questions. The first one is about the MPF. The CEO in his manifesto said that he would gradually reduce the offsetting of contributions by employers for vis-a-vis severance pay. Now that's in his manifesto, and the CS4A said that the offsetting or the abolition of the offsetting arrangement was in the portfolio of the Secretary for FS&T. You have 2 more years to go in your term. How are you going to deal with this task? The second question is that at the start of this session, the Secretary told us that last year only $3.6 billion was spent on public works. I therefore want to ask you concerning your expected expenditure on public works. How much is it? I'm afraid that you just put the money should have been spent into another pocket, and you think that is your surplus. What is the money committed but has not been spent? You only spent $3.6 billion. How many billions should have spent but have not been spent because of the proposals yet to be approved by this council? I'm afraid that you just regard them as surplus, and the public have the impression that you have a lot of money. But in fact, they are money that should have been spent. Let me speak on offsetting arrangement of the MPF. That is something which cannot be handled by our bureau alone. This is a much bigger issue, and we are considering the improvement measures. And that is also an issue of labor relations. And we are unable to see any consensus to see for improvement.
We understand members' concerns. Yet, for the whole government, in this regard, we have to refer to opinion in society before deciding on the way forward. All along, we've been very sincere in listening to the views of the public. Of course, not just the views of the labor sector, but also the views of the business sector. We'll pay attention to them, wherein, when appropriate, the MPFA would be willing to handle the issue of offsetting arrangements between contributions and severance payment and long service payment. As for public works projects, you're correct. Last year we only approved $3.6 billion, and previously I believe the figure stood at $90 billion. So we approved less last year. So in terms of implementation of works projects, commencement dates had been affected. As a result, there is a possibility of a lower cash flow. Maybe the Permanent Secretary can give you more details. Mr. Yes, indeed. Every year we have fluctuating numbers of new projects, but on the average it should be around $50 billion, excluding minor works projects. In 2012-13, the Finance Committee approved $90 billion. For 2013-14, that is the last financial year, $3.6 billion only. Therefore, that's much lower than the average figure of $50 billion. From the start of this financial year to now, we don't have new works projects for the FC to approve. Some projects have been vetted and supported by the PWSC, but we've not yet been able to obtain support in the FC. In other words, when you said that you haven't got any funding, you meant zero. For this financial year, yes, none yet. Well, this is a very appalling piece of news. Mr. Chan Kam Lam, I'd like to understand something. The financial sector takes up 6% of our GDP. In my opinion, as the economy of the mainland grows and as Hong Kong mainland collaboration enhances, that percentage of the GDP will also rise. In the past, the report published on this aspect carries a number of recommendations. I'd like to know what plans the government has for the future to implement those recommendations in terms of talents, capital, and so forth. You said that you would like to attract enterprises to make Hong Kong a fundraising center. Well, I think the only solution is to offer tax concessions. As for the enhancement measures, the government said that it would study certain options. I'd like to know when we're going to have results. For the FSDC, it's a very important body of this term of the SARG. In the past 2 odd years, the FSDC made a number of recommendations. And we've got a framework for, say, capital management, private fund development, and so forth. Now, the FSDC made a number of good recommendations. Within my portfolio, I've been gradually implementing those recommendations. So those recommendations were the results of interaction between the government and the FSDC. Some recommendations are more forward-looking. For example, some are linked to the financial services development on the mainland. Some recommendations are still developing. Well, we have to closely monitor the policy direction and pace of development on the mainland. Together with the FSDC members and the industry, we'll try to identify the best opportunity to implement the relevant policies such that our financial services industry can grasp the time frame on the mainland to benefit our own development. Our collaboration with the FSDC has been very good, so you can see that some recommendations are being implemented. As regards the capital raising center, for enterprises. That's actually a direction proposed by the Financial Secretary in his last year's budget. In the main, taxation arrangements have to be amended in our laws because under our Inland Revenue Ordinance, some tax deductions won't be feasible. So we have to amend the Inland Revenue Ordinance such that there can be tax deductions. But at the same time, we don't want to open a floodgate for tax revenue to flow out. So we would like to launch a project within this year. What about the FSDC's recommendations? Does the government have a timetable? Will you mention mainland factors, local factors, etc.? If you drag this on for too long, those recommendations may lose effect because the mainland is also changing. President Obama of the USA raised yesterday that profits made by U.S. enterprises overseas are subject to tax or taxation. In Hong Kong, can we have better measures to attract enterprises to actually stay in Hong Kong? Mr. Andrew Leung. Mr. Chairman, I have two questions. First of all, concerning renminbi, Hong Kong is a very important hub for renminbi. Well, in the past, we had this mystery of only upward adjustments instead of and no downward adjustments. But in the past year or so, we've seen more fluctuations. Well, to be an offshore renminbi center, we have to provide a number of derivative products. Now, you have to regulate these derivative products very closely to guard against problems. For example, this time, the depegging on the part of Switzerland had caused many derivative funds to face bankruptcy, imminent bankruptcy. Secondly, our regulatory regime for banks are very good, but the industry has to do business and make profits. So how will your bureau strike a balance? In the past, be it banks, the FSC, or the insurance sector, in future there will be very clear and harsh laws. At the same time, the development of these industries may be suffocated, particularly when we're a financial center. So how are you going to do regulation for the industries? Secretary, yes, Mr. Leung's observation is correct. The scale of renminbi development is not small, and it's not a unilateral trend. Now, that's beneficial to market development, emergence of derivative products, as well as transactions. Concerning regulation of derivatives, Hong Kong is stricter than other jurisdictions. For example, we have a regulatory regime for the derivative products. That's why in 2008, during the financial tsunami, we performed quite well. As for renminbi transactions, I'm of the view that we should develop domestic derivative products, that is, within our own exchange. But we have even more external derivative products. And given the international trend in this regard, we have formulated new rules for extraterritorial derivative products. For example, a clearing company had been set up for regulating extraterritorial renminbi businesses. There will be enhanced transparency as well as other clearing requirements. I believe all these will allow us to appropriately and properly regulate the transactions. As for ourselves, on the one hand, we have to maintain Hong Kong's regulatory system. Our policy objective is to perfect and improve our regulatory systems. On the other hand, for financial services development, we have to make sure that we don't have excessive development such that our industries may be suffocated. So in the past, policy-wise, if we deem something feasible, we'll hand it over to the Hong Kong MA and SFC. Say, for example, private funds and derivative products of insurance companies. So we have to strike a balance. We're playing that role. And all along, we've been a market regulator. We stand on both sides. We participate in international discussions. We'd like to know the balancing point. Mr. Sin Chung Kai? I'll follow up on that question because I did not get a satisfactory reply. Ever since the implementation of Stock Connect between Hong Kong and Shanghai, all Hong Kong investors can, through Stock Connect, purchase mainland stocks. Now, you told us that in future we'll have Stock Connect between Hong Kong and Shenzhen as well. What will be the protection for Hong Kong's investors? Yes, you have a regulatory regime for listed companies, but after listing, we also have strict rules to regulate, say, disclosure of information. Now, if Hong Kong investors purchase mainland stocks through Stock Connect, if they have complaints, what should they do? I asked this question 2 months ago. As of today, I still don't get an ideal answer. And in future, if you have Stock Connect between Hong Kong and Shenzhen or between other cities, Hong Kong investors will be able to buy even more mainland stocks. You know, on the mainland, once there's an order from the state leaders, a certain company may have to close, certain CEOs may have to step down, etc., etc. So, after all these Stock Connects, so to speak, what plans does the government have to enhance the protection for Hong Kong investors, or do you think this is necessary, Secretary, for protecting Hong Kong investors and the regulation of the cross-boundary markets? We accord the highest priority to these issues. Take, for example, the IT system used for Stock Connect. This time, we've got a very good opportunity to reach consensus, have good communication and collaboration with the mainland side. So the mechanism is there. Ever since the inception of Stock Connect, we've observed that its operations have been smooth. All right, you asked, what if there are complaints from investors? If you're talking about the Shanghai market, then of course the regulator is the regulatory authorities of the mainland, which receive complaints. So if we receive complaints, we'll refer them to our counterparts on the mainland. Well, some complaints can be handled by us, The honourable member mentioned a very important understanding. No matter in which market I invest, the mainland market or whatnot, all markets have their respective risks. So we have to remind our own investors to take note of these risks. As for Stock Connect, it symbolizes that the mainland authorities are willing to work hard to improve their regulatory regime, and their regulatory regime is globalizing. So we'll try to work hard to collaborate with them. Next, Mr. Christopher Chung. Thank you, Mr. Chairman. Stock Connect was implemented in November last year. It has been operating smoothly. Indeed, the Secretary has done a great deal of work in that regard. I'm grateful to him. Stock Connect between Hong Kong and Shanghai is a very important milestone for our financial services industry. I believe exchanges among the three jurisdictions, as well as the volume of turnover in Hong Kong stock market, will grow. When we have transactions involving the A stocks, we have to pay cash, and the shares have to be deposited with the Hong Kong X. At the same time, we have to pay 20% of the transaction cost to contribute to the reserve. But that reserve has nothing to do with risks. For the SMEs, if we buy and sell stocks on behalf of our customers, we already have to pay cash on behalf of our customers. If we are to pay 20% more, it will impact on us hugely and will be put under huge pressure. So would you please reflect this to the SFC? Can this issue of deposit money be resolved in the short term so as to ease our difficulty in short-term liquidity? Secondly, the CE suddenly announced the abolition of the investment plan that has been in existence for a decade. In the past 10 years, over $160 billion of capital had flown into Hong Kong. So we talked about talents as well.
The chief executive said that we want talents, not just capital. But in fact, we need both. We need to attract talents as well as financial resources. So, according to the policy address, the capital investment entrance scheme will be suspended temporarily. So when will the suspension be lifted? Will it be subject to any review? And what will be the consideration for resuming the scheme? Secretary, about the specific comments on the Stock Connect, and I in fact exchange my views with Mr. Christopher Chung already. Your comments have to do with the system of the Hong Kong X and measures for risk management. I'm happy to follow up on your comments with the Hong Kong X, but at the moment, on this occasion, I'm afraid I can't tell you what the result will be, but we're happy to follow up on that. On capital investment entrance scheme, we agree that the intention of the scheme was to attract talents so as to attract more talents to come to Hong Kong. I don't think attracting capital is an important policy consideration because we are an international financial center and we attract capital from all over the world to have investment here. Of course, there is justification behind this initiative, so it should be suspended for some time. Mr. Ng Sing. Now, I think the Secretary's policy briefing has been quite comprehensive. Premier Li Keqiang recently launched a global renminbi settlement scheme, and it seems that we're building up our network of offshore renminbi business from London, Paris, Europe to UAE to Singapore and Sydney in the South Continent. So there will also be development in terms of actuaries. So my question is this: how does the mainland's plan tie in with our development of an renminbi offshore business center so that we can align our strategy with theirs? And according to the Secretary just now, who said that we'll pay close attention to measures promulgated by the mainland so as to make us more competitive. Mr. Ng, your observation is very sound because the next step for globalizing renminbi businesses is to develop a renminbi settlement and clearing system, and this is where we have the edge. Hong Kong, as a major offshore renminbi capital pool, we also have a role to play, and this is conducive to the development of our market as well. And we also believe that we can give this a strategic consideration. Of course, about the positioning of the renminbi clearing and settlement system, I think the mainland authorities will have their own consideration and their own plan. What I can tell you is that we're closely liaising with the relevant ministries and officials, and there is an ongoing discussion in which we also brief them on the role of our center as the clearing and settlement system globally, and also our advantages, and we hope to play a role in it. Mr. Lee, Chairman, financial services sector is an important economic pillar in Hong Kong, as Secretary's papers suggest in the beginning, and we must strive to continue to be a regional financial center. We have a lot of competitors and the competition is keen. We understand that. We must not be complacent. We must remain vigilant and continue to improve ourselves, and also to keep track of our competitors' performance, or we'll be facing a big challenge. In the policy address, Secretary, it is said that we are going to cooperate with the mainland on the national 13th five-year plan. So on financial services industry, what recommendations have been made to the mainland? And we have free trade zones and Tianhai development at the moment. So on these, Secretary, what do you have in mind to further promote our financial services industry? Secretary, excuse me. About the 13th five-year plan, the first priority is to consolidate and bolster our status competitiveness in our financial services sector. So on renminbi business and capital management, we believe that there is much room for these businesses to perform the role to tie in with the mainland's development. In the planning for the national 13th five-year plan, our role would be to help mainland enterprises go global. Because in the past, mainland enterprises needed capital, but nowadays, apart from capital, the mainland enterprises would also like to go global. So I believe our direction should be to help these enterprises go global. As for the 13th five-year plan, the task for us is this. We should look into what is being needed by the mainland's economy at the moment, and then we adopt certain strategies to tie in and to facilitate their development. For strategies like go global, this is the right direction. The go global has multiple meanings. It may mean to properly manage the assets. The corporate treasury center is one example. Go global may also involve risk management outside of the territory, and Hong Kong can have a role to play in managing risk for them. As for free trade zone, I perceive it as an opportunity than a challenge. The Shanghai Free Trade Zone also helps the gathering of funds for mainland enterprises. That is why we have introduced the concept of corporate treasury center, so that Hong Kong can also play a role in managing the foreign capital. I'd like to follow up on para 16. The government has said that they will study different proposals to attract corporations to set up corporate treasury centers in Hong Kong. Do you have any consideration or measures that you can tell us? Well, I already answered Mr. Chen Kam Lam just now, but in short, it has to do with making adjustments to our tax system so that products or services currently not eligible for tax concessions will be able to benefit from it without affecting our revenue. And the Bureau is looking in, or the Financial Secretary is looking into that, and we will see a result very soon. Mrs. Regina Yip. Thank you, Chairman. Secretary just now said that it is important to enhance our role as the asset management center, and I agree very much, because as far as fund management is concerned in Hong Kong, we're just talking about sales, the sale of funds, and according to the FSDC, what we lack is human capital. And I've heard a lot of stories. Some say that we don't have talents in Hong Kong, and some have told me that as far as positions in investment banking are concerned, we are lagging far behind mainland talents. So what can be done about it? On asset management or wealth management, we have a number of initiatives. Apart from the corporate treasury center, which I just talked about, we would also like to expand our asset management business in Hong Kong, not only about the sale of funds, but also about management. I think this is about mutual recognition of funds, which is now being discussed with the China Securities Regulatory Commission. If we have this arrangement, there will be a mutual recognition of funds between the two places, and this will attract more enterprises to set up companies in Hong Kong, because by doing so we can induce more demand for asset management. Human capital. We believe we have talents in Hong Kong. As a former dean of the Faculty of Economics, I believe we have talents in Hong Kong. But of course, when more capital comes from the mainland, when we have a closer tie with the mainland, we also see a demand for mainland talents when we welcome them. And mainland talents worked in various sectors in Hong Kong, and I believe as we expand our asset management center and wealth management center, we will need more. We will have more capacity to attract more talents, and indeed there are areas in which we still need talents, for example in compliance, in mid-office roles, and these are high-ranking roles. In the financial services sector, there are different positions. Not everybody is an iBanker, so to speak. We need talents in various positions in different fields, and local talents are really qualified for these positions, which are also high-paying jobs. So on the one hand, we'd like to attract more financial companies to expand their business in Hong Kong. At the same time, last year, Financial Secretary recommended a review on human resources for the financial services sector, and we are looking into recommendations to see how we can let the public know about the variety of positions in the sector. Yes, allow me a brief follow-up question, because the Secretary asked a very long question and I was unable to follow up on his point. Well, there'll be a second round very soon. Next, Dr. Kenneth Leung. About the progress of the Treasury Management Center or the Corporate Treasury Center, I think the Inland Revenue Ordinance will have to be revised to provide tax concessions. So my first question is about your progress. Secondly, as an international financial center, in terms of the automatic exchange of financial account information in tax matters, what has Hong Kong done in terms of a review, and what is the progress? The third question is about the working group on human resources under the FSDC. The recommendations were made last week. In fact, I also wrote to Mr. Matthew Cheung, but the letter seemed to have been passed on to you. And my suggestion is on a review on human resources, not just on the financial services sector, but on the whole economy. So will you do that will you discuss with the Labour and Welfare Bureau? On Corporate Treasury Center, I think very soon we're going to make recommendations, and you're right. The key is to revise the Inland Revenue Ordinance, and we will be putting forward our proposal for LegCo's consideration very soon. On OECD's automatic exchange of financial account information in tax matters, this is a new global standard, and our pledge is that will meet the relevant legal requirements, such as privacy laws. And under this premise, we will facilitate the setting up of or implementation of the AEOI in Hong Kong. So there'll be legislative amendments, and there'll also be some work to be done to meet the public's expectation. And if I remember correctly, in 2018 there'll be the first AEOI. So perhaps by 2017 or before that, we may have to complete the legislation exercise. And we're now in 2015, so we are getting quite anxious. We hope that by the end of this year, we'll be able to table the legislative proposal for electrical scrutiny. I'd like to take this opportunity to remind members that this is important to Hong Kong, and I urge members of this council to cooperate fully with us. Human resources. I haven't received your suggestion. Well, I wrote to Mr. Matthew Cheung asking for a study on human resources for accountants, because over the past decade or two we have not had a comprehensive study. Of course, this should be led by a professional body, but perhaps I can follow up on the point with you later. I have no more questions, Chairman. Mr. Wong Kwok Heng, second round. Thank you, Chairman. Just now, Permanent Secretary, Ms. Chair, told me that in terms of public works project, the expenditure in 2012-13 was $90 billion. In 2013-14, it's $3.6 billion, meaning that in the new in the new financial year, the expenditure so far is zero. Is my understanding correct? If so, I think this is really shocking, because in 2014-15, because of the non-cooperative campaign staged by the opposition camp, the expenditure for new capital works projects in 2014-15 is zero. Now, my question is this: has there been any assessment on the increase in construction costs because of this zero expenditure at the moment? Well, last year it was suggested that the increase amounted to $2.5 billion. So what is your assessment on the future possible increase in construction costs, and about the funds reserved for projects that have yet been spent? Where are the funds at the moment? Well, let me take this question. Mr. Wong, your point has been stated a number of times, and because of the situation, the progress of infrastructure projects have been delayed, and construction costs may spiral, and mismatch of workers in the construction industry may also become more serious. The Permanent Secretary can give you some figures, but let me say this first. An ordinary member of the public may not understand the figures at one glance, because we have annual budget for projects, and in terms of expenditure, the amount may remain the same. But you're right in pointing out that for newly approved projects, although it seems that in terms of cash flow, the progress of existing projects is stable, but in future we may have to pay a higher price for it. Permanent Secretary. Now, I was referring to legislative year instead of a financial year, so the period or the cycle may be different. Now, in terms of zero expenditure, as mentioned by the member, we are talking about new projects which have not been scrutinized by the Council this year. Now, cash flow is one matter. projects not yet approved is another matter. So far, we haven't seen the full effect, but it's true to say that construction price would go up if we approve the projects later. In fact, in this year, the Public Works Subcommittee of the Council also has also given endorsement to some new projects, but they're now in queue, waiting for it to be passed at the FC. So my question for PS is this. You said that in 2012, 2013, it was $90 billion, and in 2013-14, $3.6 billion. Can you tell me, 2014-15, is it $0 billion? Yes, at the moment.
That's in respect of the Finance Committee of the Council, right? Yes, thank you, Chairman. All public works are based on the resolution of the Capital Works Reserve Fund, and they have to got the approval of the PWSC, and then go before the Finance Committee and then approval from the Finance Committee. Chairman, that is very important. It's an important message. That cannot be unclear. I thank Ms. Chair for clearly spelling it out. The situation is that the Finance Committee in the session of 2014-15 has not approved any new projects. So the amount of money approved is $0. I hope all the citizens of Hong Kong can hear this serious message. This is a very serious message. In this council, the opposition members have done this. This is done by the pan-democrats. This is a current a very serious situation, and people have to bear the consequences. Mr. Sin Chung Kai. Well, we just passed the funding for three landfills and 1 incinerators. Now, whether it's the Shanghai Hong Kong Connect or Shenzhen Hong Kong Connect, can you give us a paper with regard to the regulation of listed companies in Hong Kong vis-à-vis the regulation of listed companies in China? What are the differences? What are the disclosure requirements? If our regulatory body is not able to follow up on the complaints of mainland companies, then what can we do? Now, can the Chinese SEC come to Hong Kong, set up an office to deal with the complaints, or can Hong Kong investors go to the mainland to lodge the complaints with the Chinese SEC? Do you think such problems do not occur or will not occur? Or do you just say that caveat emptor? That's the fact of life. Now, if you buy something, then you better watch out. Don't blame me. Can you do more publicity and warn people against the difference in regulation between the two places? In respect of the regulatory regimes of the two places, there must be a difference between the two. No two regulatory regimes are identical. Our listing regulations, our financial laws are different from other financial markets. Say, for example, the Hong Kong market is very different from that of the U.S. market. There are different rules. In terms of investor education, we have put in a lot of resources. Under the SFC, there is the investor education center, which has put in a lot of efforts in promoting and educating the public about the Stock Connect. The member may not fully agree or may not fully support this. On one hand, we have to educate the public. On the other hand, we also have to enhance the cooperation between the two regulatory bodies. And when there is a problem, and if the problem is in relation to enforcement by the regulator or regulators, I think we can get the approval of the securities authorities of both sides. There are potential risks in each market. And regulators, the investors have to understand the risks involved. Is there any follow-up? I asked for, perhaps I have not put the question very clearly. The first question is, can you give us a paper on the differences between the two regulatory regimes, Hong Kong vis-à-vis Shanghai? And will you ask the mainland regulatory body to step up their publicity and highlight the risks to the investors? Say, if you buy stocks through the Stock Connect, now there are Hong Kong investors who can buy U.S. securities. They don't do it through the XX Connect. They open a U.S. dollar account. They have a U.S. account. They have an account in U.S. They work through the U.S. brokers. The risk they bear is rather direct, but you have the XX Connect. Now you buy mainland shares, Shanghai shares through local Hong Kong banks. That's very different from you have an account in the U.S. and then you buy shares through U.S. brokers. I don't know whether you have done any publicity and spell out the differences. Of course, we can step up publicity on this front. Let me correct your point. I don't agree with the point of view. The Shanghai Hong Kong Stock Connect is just to provide a channel to enable Hong Kong investors to buy mainland shares, which is in comparison using different brokers who are going to buy shares in more open markets. I think they are the same. The Chinese SEC in the past didn't have such cooperation arrangements. The HK, the Hong Kong SFC has the cooperation arrangement with SEC of US. We work with the mainland authority, the Chinese SEC, and we can have the Shanghai Hong Kong Stock Connect. You asked for a paper. Now the security rules, the corporate laws are different. I really don't understand how the paper can help us to answer the question. I think Mr. Sin wants a. Do you want a paper on protection of stock of investors? Well, if the secretary doesn't find it important, that's okay. I think the problem will occur. And when the problem occurs, you may not be still in your post. I just want a paper to explain the regulatory differences between Hong Kong and Shanghai so that Hong Kong investors understand the additional risks of the XX Connect and how do the risks differ in terms of buying shares in Hong Kong. In terms of investors' education, I agree with Mrs. Sin. There is a need to step up education. Okay, please draw up a paper for the public's understanding. Mr. Christopher Chung. We welcome the development promotion of Treasury management. That is to provide another outlet for our trade to solve our current problems. If we are to go into Treasury management, we need a license number 9. And we have to pass exams to get license number 9. training plus exam may require us a year or so. If one fails in the exam, one may take a longer time to get the license. Well, we have been brokers for 30 or 40 years. We're very experienced in risk management. And our business also includes the handling of discretionary accounts. In fact, we are a small asset management company, and we have to compete with youngsters who have no experience. We sit the same courses, we sit for the same exams, and our decades of experience have not been recognized. We have weathered through the ups and downs in the markets. Now, if you want to allow local stockbrokers to participate in assets management, will you consider our experience and exempt a part of the examinations, exempt part of the papers, so that we can have an outlet? As for Mr. Christopher Cheung's question, you refer to asset management is different from Treasury management. You mentioned license number 9. We're happy to refer your questions to the SFC for an answer. As for the licensing conditions set by the SFC and also the requirement for fair dealing, I think the SFC can form a view on that. Now, if you intend to help us, then it's a chance for you to allow us to have license number 9. In fact, license number 1 does include the business of list number 9. I hope that you can. In fact, it is a question left over from history, and I hope you can help us to yes, we are happy to refer your views to the SFC. The FCC is coming. I want to clarify this. Just now, my colleague has raised a point on public works. Just now, Mr. Sin mentioned this. In fact, a few months ago, the SFC approved the 3 landfills and 1 incinerator and also the food waste facility. But they were items left over from the last session. Mr. Wong Kwok-heng, I want to ask the Secretary concerning the new PWPs, the committed items that cause the escalation of costs. You have not spoken on cost escalation.
討論石禮謙議員嗰個議案嘅時候呢，你喺回應本會嘅時候就
Now, when you respond to the motion moved by Mr. Abraham Sheikh, you said that the cost increased to $2.5 billion. Originally, it was $2.3 billion, and now it's 2.5, so 200 million more.
來應該喺14-15年度就
Now, these new projects should have been paid in 2014-15, but that cannot be done because no approval has been given by the Finance Committee. So can you tell us the total, how much will the total be increased? Do you have an estimate? And what is the percentage? Mr. Wong Kwok-heng. Well, I'm equally anxious as you are. I hope the projects can be passed as early as possible. I'm concerned about cost escalation, and some items are even worse. They have a tender period or tender validity period. Say, for example, Liantang Hengyun Y is an example. There is a validity period, and the validity date expired at the end of December last year. And because we can't get it through, we have agreed to extend the validity date until the middle of this year. And if we can't get the approval, then the tender will have to be done again, and the cost will certainly be higher. And the delay will be even worse, because you have to do the tendering all over again. If you ask for an estimate and how much the cost escalation will be, there is great uncertainty. And I can only say that I'm equally anxious as you are, and I hope that we can change the situation. Now, I want to ask the Secretary, how many tenders have passed the validity period? The Permanent Secretary, the number is fluid. Earlier on, we produced a paper on the items under the PWSC and the tender valid dates or tender expiry dates, and each project is different, and we have to check it all the time. Chairman is a legislative councillor. The Finance Committee of the Legislative Council last year was unable to approve any funding. I find it regrettable. I have to tell, they have to say apology, they have to apologize. That is dereliction of duty. The FC. As for the Pan-Democrats who oppose for opposition's sake, they make the FC fail to discharge its duties. I strongly condemn them. That has brought about loss to public, the livelihood of, and also to public money. I find it very sad. Next speaker, Mr. Kenneth Leung. Now, Mr. Wong Kok-eng said the FC has failed its duties, but the FC has a duty to consider each and every project very carefully. With regard to cost escalation, there are many factors contributing to that. That may be the caused by imbalance in demand and supply. And the Secretary may say that get into academic discussion. If there is no expenditure, but if there is a lot of government projects, even if you don't, that will already jack up the cost. Is the cost created by excessive demand, by delay, or by rational expectation? We cannot have a firm conclusion unless Mr. Wong Kok-eng can explain that. I just want to state clearly that concerning each infrastructure project, the FC has to consider the project very carefully. The government may have the position that this project is necessary. But in discussing Mr. Abraham Sheikh's motion, I say that if you use an infrastructure project to stimulate the economy, then the economic revival cannot be established, because the unemployment rate of 3.5% can never be a reason to describe the Hong Kong economy as that it is in a recession. We need diversification in our economy. The question is whether your infrastructure can broaden our economic base and drive the economy forward, and that's the most important factor.
Mr. Chairman, I also mentioned before that you mentioned a so-called headquarters economy. Well, we can consider that, but if you do not consider our economic development, but every year we're going to spend 100 or 200 billion on infrastructure for our financial services, then you really have to go back to the basics. We cannot just rely on our fiscal policy to stimulate our economy. Our economy does not need excessive stimulation. We need diversified and sustainable development. Well, you can observe this elsewhere in the world. For the definition of infrastructure product, apart from the traditional railways, roads, highways, flyovers, etc., I'd like to refer to what Mr. Abraham Sheikh. We really have to look at a broader definition. Green management project, environmental projects, more livelihood-related projects, etc., should be looked into in a more in-depth manner. Yes, we have to look at projects like the 3 landfills and the incinerator. We don't want to derail you every time. If you want to build one more road, one more railway, well, your fiscal policy then may stimulate the economy. But for the railway and the road itself, we really have to look at how many users are to use the railway and the road in the next decade. And what benefits do we have? And we have to look at all the assumptions. In the Finance Committee, we didn't have time to look into all those. I need 30 seconds more. We're not just looking at your projected statistics. We have to look at each and every project to see whether it is realistic, what the underlying assumptions are. And for all these years, Mr. Chairman, we've not been looking into all these factors, so I'm disappointed in that regard. Secretary, very simple. Now, I don't want to be long-winded. I don't want to debate all those viewpoints with members. Well, we have such a huge backlog in the FC. The so-called controversial projects have led to filibustering in the FC, and we got a backlog with our agendas. For the 3 landfills and the incinerator, there are livelihood-related issues, and for Northeast NT, the so-called controversy and the reasons behind them have caused all these backlogs in the FC. Well, I don't think we need to debate whether or not the filibusters were genuine or not. The fact is that we did have filibustering in the FC. Now we have to conclude this item at 10:20. Mr. Wong Kok Hing. Mr. Chairman, I don't think I need to spend time to respond to Mr. Kenneth Leung's remarks. As he mentioned by name, I have to put up this brief response. I actually mentioned this response many times, and just now I launched some conclusive criticism at the filibusters. Now, if not all projects for 2014-15 could be approved in terms of funding, and the Financial Secretary's budget is yet to come, what about the budgeted expenses that have not yet been spent, as I asked just now? The money is still with us. If the government is to announce that we are having a surplus, what will happen? Or are you going to tell us that the two issues are not interrelated? Now, there are rumors that in the past year we'll have a surplus of tens of billions of dollars. Can I have some clarifications? Well, when the budget is released, we'll have more figures. As for the trend itself, if you say that as public works projects experienced delay in funding, then probably our budgeted expenses won't materialize either. Because of delayed approval, there will be underspending for that year, and this is likely to happen. As a result, the surplus may become bigger. Well, that may be the trend, but is that really the case? We have to wait for the 25th of February to come. Members of the public have to understand the figures. I'd like to thank the honourable member for his concern about figures. I would also like members of the public to understand the underlying causes for those figures. Well, underspending is not a good thing. We would like to spend money quicker. For these projects, if they're to benefit our economy, then that delay will lead to social value or social losses or economic losses, and we should be concerned about those. I think the Secretary should tell the Financial Secretary that in future he should put up very clear explanations for his budget. Because if the unspent money is to be considered as surplus, there will be a problem. And the FS should be clearer about future additional costs. For example, tenders not awarded may lead to higher construction costs. And what about the differences between the budgeted cost and the actual cost? Well, we all know that the pandemocrats have been filibustering, but maybe members of the public don't know the price of filibustering. So the FS has to make all these clear. Now we have to grasp our time better. Suddenly a few more members came in. We only have 7 more minutes to go. 2 minutes per member. Mr. Lee Cheuk-yan, speaking for the first time. Mr. Chairman, I'd like to ask about the MPF. I'd like to ask about the offsetting arrangements. The government said that that's a very complicated issue. In fact, it's not complicated. We want at least a partial abolition of the offsetting arrangements. I think the government has been reneging on its promises. Is the government just fooling us around, Secretary? Well, this issue or controversy has been with us for quite some time. I understand the members' concern. At this juncture, we don't yet have a clear social consensus. Repeatedly, the government said on different occasions that we would monitor the development of the issue as well as discussions in society. That's still the case at the moment. Mr. Lee Cheuk-yan, well, did the Secretary mean that the government would do nothing when there's still no consensus in society? Well, I can tell you, you definitely not get consensus in society. That means you're not going to do anything. So you're just being wishy-washy. In fact, Mr. C.Y. Leung promised this in his manifesto when he stood for election. For any politician, he should honor his promises in his manifesto. Is the Secretary now telling us that we should stop thinking about this? Within the tenure of C.Y. Leung, he's not going to do anything about that. Secretary, well, I'd like to listen to more views from members. Mr. Andrew Leung, well, it's a fact, undeniable fact, that there has been filibustering in this council. Some members asked for a discussion on the happenings in the FC. Well, if our colleagues are so attentive in these things, how can you make our councillors more positive and expeditious in handling the agenda items in the FC, in the PWSC, etc.? I think you should consider all assumptions, including the assumption that all problems in society can be solved if we have universal suffrage. You should also consider the assumption of the constitutional proposals being vetoed by this council? And how will society be affected if that is to happen? Well, if members are interested in those issues, I believe we can find another opportunity to discuss all those issues. I think those issues are interesting and are worthy of discussing. That is how existing phenomena will impact on the long-term development of Hong Kong. If we are to quantify all these issues, it won't be too difficult. Members want us to discuss those assumptions. Well, if we are to discuss how such controversies will impact on our long-term economy, we can do so. Well, we're very near to 10:20. Mrs. Regina Ip, Mr. Lee Chok-yan and myself have questions. Mr. Lee Chok-yan, 2 minutes. Mr. Chairman, the operations of the Finance Committee was mentioned just now. But just recently, you invented something. 4 items were taken out of the FC agenda, and the government said that those 4 items would be put directly under the budget debate, under the appropriation bill. So in future, are we going to handle the old and new items separately? Because the FC will no longer have an opportunity to discuss those 4 items. And then under the appropriation bill, we won't have enough time to discuss all items under all bureaus. Are you trying to bypass the LegCo? Are you going to damage the convention, the established convention for the executive and the legislature? Are you weakening the LegCo's power to scrutinize the budget? And do you admit that you're actually weakening the monitoring role of the LegCo and you're damaging our convention? If that is the case, that will impact hugely on our constitutional arrangements. Secretary, Mr. Chairman, we have no intention to bypass the LegCo. We respect the LegCo's role in vetting our funding proposals. Our suggestion to put those items under the budget debate have been clearly explained to members. We would like LegCo members to understand clearly this proposal when they discuss our budget. Well, we have conventions for the executive legislature relationship, and you're now destroying that convention. And for the budget, we're told that we'll have a discussion in this panel. But now that discussion had been abolished. Are we going to have that back? Well, it's because the budget is due for publication. We explained to this panel, we explained to the public, well, the FS has explained to us. I think it's necessary for us to discuss that. Well, we discussed that and deemed that unnecessary. Mrs. Regina Ip. Very simple, 2 minutes. Very simple. I would like the Secretary to be concerned about the employment of our financial talents and professionals. For mainland investors, I think you have to remind them that apart from mainland connections, we have to give opportunities to local talents as well. I fully agree with the Honourable Member. I'm fully willing to put that under our policies. We would like local talents to have development opportunities. It's now my turn. From this paper, we can see that the Secretary has done a great deal of regulation for the insurance industry. Capital increase, protection fund enhanced for the investors, intermediaries, regulation, etc. Now, all these have evolved in the past few years, and operational costs have risen. I'd like the Secretary to study how, under so many constraints, a balance can be struck such that we can develop the insurance industry. And for reinsurance as well, we would like to do reinsurance business as well. Very simple. We'll spare no effort in developing new markets, and will value input from the industry. And just now, I think Mr. Andrew Leung asked a similar question. That is about the role of the government, how we're going to strike a balance between development and regulation. We'll try our best to communicate with the industry such that while regulating the industry, we won't add too much to their operational costs. Thank you. Let's proceed to item 4 on the agenda, briefing on the work of Hong Kong Monetary Authority. The Hong Kong MA already submitted a paper to us, and they're going to do a briefing as well. Hong Kong MA? We welcome the Chief Executive of the Hong Kong MA, Mr. Norman Chan, and his colleagues. Mr. Chan, you can do a briefing. I hope all of you can finish your briefing within 25 minutes. Yes, thank you, Mr. Chairman.
Good morning, Chairman, members. I'd like to speak on a number of points, and my colleagues and myself will be as succinct as possible. Now, over the past few months, in terms of a global economic environment, there have been major changes. Most importantly, last October, the Federal Reserve of the United States ended this asset purchase program as scheduled. As you know, the end of the asset purchase program is part of the mechanism to withdraw from the market. However, on conclusion of the asset purchase program, the interest rate did not go up, but rather went down. At the same time, the exchange rate of the US dollar fluctuated greatly in contrast with other currencies. That means appreciation of the US dollar. Now, for euro, the performance had not been quite good, and for Japanese yen, the government tried to boost the currency as well. And different countries have different paces of economic recovery. And as we understand, the trend is different for different countries. The Japanese launched the the enhanced QE version last year. And on the 2nd of January, the euro also launches enhanced QE mechanism. So as you can see in this chart, in the second half of last year, there were great fluctuations in terms of the exchange rate of euro. It dropped drastically from 1.38 to around 1.1 with US dollar, and the drop was quite obvious. Similarly, for Japanese yen, it also dropped all the way from 100 to 118.3 for yen versus US dollar. The other point that I wish to make is that on the 15th of January, the Swiss Central Bank, Swiss National Bank, discontinued a unilateral system against of Swiss franc against euro that have gone on for 3 years, and it was quite a shock for the market. And the green line showed the Swiss franc versus euro exchange rate, and there was a sharp increase of up to 40% that day, and later on it dropped to a stable level of 20%. As far as export and tourism in Switzerland is concerned, they were quite heavily impacted upon. So you could see that for the Swiss stock market, there was a plummet. The other development, which we've all noted, is the substantial drop in oil prices globally. In particular, in the second half of last year, from $100 US per barrel to some $40. That represented a drop of 40%. So for oil export countries, they bore the brunt. And I've chosen the example of Russian ruble, exchange rate and credit default swaps. In the blue line represents the Russian ruble. The exchange rate was 33.7 ruble versus US dollar. Before the drop in oil prices, now it has dropped to 69 ruble to US dollar. Oil export accounted for over 50% of the total export in Russia and contributed 50% of total government revenue. So such a substantial drop in oil prices have had a huge impact on this economy and on government revenue, and this was immediately reflected in the currency market. And for the red line, which shows the credit default swaps, it increased by 500 basis points, which show the substantial increase in CDS because of high risks. Of course, the Euro Central Bank also increased the interest rate by 11 BPS, but it has not seen it didn't seem to be very effective, and the figure has dropped to from some 400 billion to 300 billion dollars. Well, only oil exporting countries like Russia and Venezuela be affected because of the substantial drop in oil prices? In fact, the answer is no. There is also an impact on the U.S. high-yield bond spread. For example, here in the red line, you can see that in terms of U.S. high-yield bond, energy and oil companies have seen an increase in the interest rate by 500 BPS after the oil prices drop. And even for overall high yield bond, it has similarly increased quite substantially. So oil prices drop not only affected oil export countries, but also other countries and financial markets due to the rippling effect, and that results in the higher risks. As for the U.S. market, we're concerned when the Federal Reserve would increase its short-term interest rate and adjust its policy. Earlier, we forecast it to be in the middle of this year. Now, there are more certainties. There are more uncertainties because the drop in oil prices would push down inflation rate in the U.S. And secondly, because of the situation in the European Union, the pace of recovery for the U.S. may also slacken, easing the urge for increase in interest rate. Of course, increase in interest rate would help push down inflation, but a drop in energy prices would also benefit U.S. consumers at the same time. Their consumption power may be increased through cheaper oil prices. So this will help the growth in the U.S. The other point causing uncertainty in when the interest rate will go up will be about the unemployment rate. That is pressure in the U.S. locally for wage increase. Now you see for the unemployment rate marked in blue, it has now dropped to some 5.6%, and yet there is a red line here. The red line represents the Fed's forecast a year ago on unemployment rate. Last year, the Fed forecast an unemployment rate of 6.5%, but now it is standing at 5.6%. So Fed is overestimating the unemployment rate, and there is in fact a surplus. The Fed believed that since there would be a surplus in manpower in the market, there won't be much pressure to increase wages. But in fact, because of a lower unemployment rate, there will be a high pressure to increase wages. So despite the drop in oil prices, the U.S. economy will see a pressure to increase wages, causing inflation to go up. So on the whole, the timing and pace of U.S. interest rate normalization have become more uncertain. But despite the uncertainties, because of various reasons, we're seeing continuous inflows of funds to the U.S. dollar, causing an appreciation, and this will continue. And for the foreign exchange market, there will continue to be a higher volatility. And Euro and in Japan, the enhanced QE policies effectiveness remains in question because the policies is about decreasing interest rate down to 0% to boost funds flow, and this may not really be conducive to the growth of or recovery of the markets. And also there are pressure on economy, on energy and commodity exporting countries. And this year, some $350 billion have flown from oil export countries to oil importing countries. And the price drop by 50% per barrel would cause funds to flow from oil export countries to oil import countries, and this may cause some risks to these market economies. Very briefly, something about China. As you can see in this chart, the economic growth in the mainland is marked in red. And you can see that the growth has slackened from 7.7% in 2012 to 7.4% in 2013, down to 7% in 2014. And for net export, it has ceased to become the major drive of mainland's economic growth. Rather, it now depends more on consumption and capital formation. And this 3 lines shows investment growth apart from infrastructure, which has seen the more moderate growth. For manufacturing and real estate FAI, they have continued to drop. And the situation, as far as property market in the mainland is concerned, has continued to slackened, and this will continue to be the case. On the whole, our view is that economic growth in the mainland will continue to be moderated, but the risk of a hard landing is not high. Our judgment or our assessment is that although there are downside risks, there are also measures rolled out by the authorities to support economic growth. For example, they have continued to relax the tightening measures on property market in various cities, and there are also infrastructure investment, traffic, river works, etc., and they will be increased, and there will be measures to strengthen liquidity in the banking sector. So, having talked about the global market, I'd like to focus on the Hong Kong market. We're concerned about the property market. In 2014, starting from the second quarter, the property market has revived. The number of transactions increased to up to 5,900. But last year, we saw a number of features. For example, the transaction volume in the primary market was quite high, up to 26% of total transactions. In terms of property prices, they have increased, with a more obvious increase in the price of small to medium-sized flats. This year, the trend of the property market will be subject to a number of factors. It is complex. Apart from demand and supply, one major factor is the interest rate in the U.S. market, which will affect Hong Kong's interest rate. However, there are still uncertainties over the time and pace of the U.S. interest rate normalization, and therefore we will closely monitor the development, and if necessary, the Hong Kong MA will launch suitable counter-cyclical measures. Lastly, I'd like to talk about credit expansion in banks in Hong Kong. Last year, we saw a growth rate, overall speaking, of 12.7%, slower than that in 2013. But in fact, if you look at the chart on the right, you can see the variations in the 4 quarters last year. In the first quarter, the growth was quite rapid, up to 23%. And in the fourth quarter, it was just 3.7%. So the growth normally for the fourth quarter was quite slow. And the measure is a positive one, meaning that on the one hand there is a lesser need for credit expansion, and at the same time risk management has also been implemented properly. And we also need to look at the credit demand for credit or bank loans in Hong Kong due to moderated mainland growth. I'll defer to my colleagues to say more on this. Well, next I'll say a few words on banking supervision. Legislative amendment will be involved. First of all, on Basel III implementation, starting from the 1st of January 2015, we already implemented the second phase of Basel III requirements, and 3 legislative amendments took effect from the 1st of January 2015. And under the new requirement, we could introduce certain requirements on, say, capital rules. And in fact, last Thursday, the Hong Kong MA announced that we are going to impose a capital requirement of 0.625% as the counter-cyclical requirement. And there will also be other capital and liquidity requirements. In the coming few years, we will phase by phase implement the Basel III according to the powers were given under the law. In the beginning of January, we also tabled a bill into LegCo. In relation to the new regulatory requirements mentioned, we also do require banks to make certain disclosure and legislative amendments are necessary to give the necessary powers, and we hope that the subsidiary legislation can be completed by the end of March. The other work has to do with the setting up of a resolution regime for banks. I understand that next month there will be an item for discussion at this panel, and to save time, I won't go through the details. In gist, we just launched a second consultation exercise, which sets out our key proposals on setting up an effective resolution regimes, and we'll discuss the details at the next meeting in March. And next, about another banking regulatory requirement is enhancing the deposit protection scheme. In the fourth quarter last year, we launched a public consultation to enhance the deposit protection scheme. That is to say, how we can expedite compensation progress if we are to give compensation to depositors. And we received quite some feedback. It has to do with preparing legislative amendments. Our next step is to draft a bill, and in the middle of this year, when in due course, we'll be briefing members of this panel, and we hope that we will be able to table the bill for scrutiny by LegCo. And also, the coin collection program started last year had been successful, and it had also been quite popular. And the number of patronages was 63,000 with 57 million pieces collected. And the total value amounted to $53 million. And the costs for making coins have been saved. The procedure had been smooth, and members of the public on average waited for less than 10 minutes. And we completed our first round of coin collection in 18 districts. And the exercise will continue till September, and then we will conduct a review. Another key task is to develop a legal framework for retail payment. For the Clearing and Settlement Systems Amendment Bill, the drafting has more or less been completed. Mostly the bill seeks to ensure adequate protection of users' flow, maintained with the store value facilities and the security and soundness of operation to give consumers protection. And the bill will be introduced into LegCo on the 4th of February. On e-check, this will automate the process in a paperless manner so that members of the public can issue e-checks through online banking, email and mobile apps can be used for the issuance of checks. And the recipient can also use the same mechanism for depositing of checks. Paperless transactions would cost the whole transaction more environmentally friendly, and the security features will also be enhanced. The legislative exercise has been completed in the second half of this year. We will launch publicity campaign, and there will be a 3-month pilot run starting from December 2015.
I give you 5 minutes because we need to give ample time to members ask questions. I will speak briefly. On the offshore renminbi market, on the left-hand side, you can see that the trade settlement through Hong Kong banks, in fact, has risen to $62 billion. And the right-hand side is the renminbi RTGS. You can see the amounts continue to increase. On an average basis, more than 800 billion renminbi. As for on the left-hand side, the renminbi deposits in Hong Kong, if you, that's CDs and customer deposits, it reaches 1,200 billion renminbi. There is no daily restriction starting from November on conversion. There is more flexibility. On the right-hand side, you can see that as for issuing of dim sum bonds, last year, about $200 billion, an increase of nearly 70%. As for the dark blue line, a dark blue chart, an increase of 60%. They are renminbi loans. As for the performance of the exchange fund, as said by Mr. Chen, the director, it is a rather uncertain market, and it's very volatile because of QE, the European Central Bank, and also Japanese government, Japanese Central Bank. U.S. exchange rate rose by 12.8%, which is the highest in the past 17 years. The change in market situation has reflected in our investment incomes. The overall investment incomes, the shares, $42 billion, among which $5 billion from Hong Kong shares and 33.7 from foreign shares. Other investment includes private equity and also real estate funds, 8.8 billion. As for because of the fall of the euro and the Japanese yen, the total income is $46.3 billion. Total return 1.14%. As for diversification of investment, in our long-term growth package, investment in private equity rose to $80.5 billion, real estate $34.7 billion, altogether $115.2 billion. In comparison with the total of $210 billion, there is still room for us to further invest, and the rate of return, IRR is 13.5%. The left-hand side, the amount we should have paid to the financial reserve is $27.5 billion. That is based on 3.6% fixed rate. And you can see from this final table chart the overall rate of return of the exchange fund. We attach to capital preservation first and long-term growth. We only had a deficit in 2008 because of financial tsunami. The average return is 5.2%. If you compare with inflation, 2.2%. We are still a bit higher than inflation. I'll stop here. Thank you. Now, Andrew Leung, Christopher Chung, Kenneth Leung, Regina Yip, James Tian, Ms. Andrew Leung, 4 minutes each. Mind you, there may only be one round per member. I have 2 questions. First, slide 13, the credit growth in Hong Kong. We can see that there is a decline in growth, just 3.4% in fourth quarter in terms of growth rate. What about financing for SMEs? Will there be an adverse impact? And will there be an adverse impact on Hong Kong's economy at large? Now, that is the delinking of the Swiss franc to the euro. And that's a big fluctuation. It seems that they harmed others but didn't benefit themselves. How does it affect our link exchange rate? Within such volatility, how can the administration and the exchange fund give us confidence that we're able to maintain the peg? Thank you for the question. As for financing for SMEs, I think our banks are doing quite well. You can see that in Europe or in the United States, the government and central banks discover that for one reason or another, the banks are rather tight in respect of lending to SMEs. Apart from the banks, which give loans, the government also provides a guarantee scheme to help the SMEs. With the decline in the overall demand for credit, if SMEs have certain projects and if they are willing to borrow, I think the banks are rather positive. Maybe Arthur can supplement. Yes, just a quick point. Now you can see the left-hand side of the chart. Credit growth was rather fast in the past few years. The major driving force is for non-local use of loans. Non-local, say for example, borrowing for overseas investment or borrowing for mainland investment. As for local use loans for local use, the growth is rather stable. Say, if overseas or mainland companies have reduced demand for loans, then banks may put more emphasis on loans that are used locally. The second question is on the 15th of January, the Swiss National Bank take away the peg. In fact, that was done 3 years ago. That was a decision made 3 years ago. Their system is different from our link exchange rate. Theirs is a one-sided link. But as for our peg, it is a currency board system. It is comprehensive. It is very well disciplined. Now the Swiss franc removed the link, and there was a big shock in the market. But if you look at the impact on the Hong Kong link exchange rate, Hong Kong dollar link exchange rate, you have not seen any great impact. We are capable and we are committed to maintain the link exchange rate. And people have a very strong confidence in the link exchange rate. The U.S. has its own, the Swiss National Bank has its own consideration. If they didn't do that, then they might have to pay a very high cost if they do it later. Mr. Christopher Chong. The currency market is our main concern. The U.S. has stopped its QE, and there are rumors that in the second half of the year they may increase interest rate. As for other markets, they have introduced QE measures. It seems that a currency war is going on, and we can see exchange rates of different currencies fluctuate widely. We have seen Japanese yen did so recently, the euro, the ruble, the Swiss francs. And last week, it was the Singaporean dollar. Recently, Thai baht and Malaysian ringgit have a chance of depreciation. In view of this abnormal volatility in the currency market, how do we assess the impact of the currency war on Hong Kong dollar and the renminbi? And will that affect the stability of the Hong Kong stock market. If the interest increases interest rates together with a currency war, will there be more funds flowing into the U.S. market, and the risk of the Hong Kong market will increase? Mr. Chan, I dare not use the word. I would rather not use the word currency war. Now, the central banks introduce monetary policies, and the possible impact of such policies may lead to a decline in interest rates of their decline in exchange rates of their currencies. Apart from the depreciation of their currencies, what will be the other effects? And we do have a lot of questions about it. Exchange rate is a very important factor in the financial market. If you invest in certain financial assets, if the currency fluctuates, that will lead to a wide fluctuation in your rate of return. And that is not good for the real economy, and that isn't good for the financial market either. In the past, if the US was strong, US dollar was strong, then the emerging markets had pressure in the funds. Now, when the U.S. dollar was weak, funds flowed into the emerging markets, and when the U.S. dollar becomes strong, then funds will flow into the U.S. market from the emerging markets. But if the fluctuations are not high, that may not lead to serious systemic risk. As for the U.S. dollar, because of the link exchange rate, U.S. dollar to the Hong Kong dollar to U.S. dollar is stable, but the renminbi is against the U.S. dollar is floating. There may be some outflow of funds, and the renminbi may have a downward pressure. Last year, the renminbi depreciated 2.4% against the U.S. dollar, but in the long term, because of good fundamentals, the renminbi may have a good outlook. Any follow-up, Mr. Cheung? If not, then Mr. Wong Kok. I want to refer to PowerPoint 25, investment income. I want to ask the authorities, with regard to foreign exchange losses, 52.7 billion for the whole year. The absolute amount is very big. In 2011, 2012, it was in the negative. In 2013, it was a positive. Under such circumstances, I want to ask the CEO, would there be any adjustment in investment policy? The second question is this. You can see from the table that they invest in Hong Kong equities, other equities, bonds, other investments, and foreign exchange. In terms of the percentages of these, will you change your strategy? In particular, you lost so much in foreign exchange.
其實外匯舊年係虧損527億。
The loss in terms of foreign exchange is $52.7 billion. Now, it is because of the sharp increase in U.S. dollar. As long as your portfolio has non-U.S. dollar assets, then it will lead to foreign exchange loss. The number is big. But if it is considered in the context of the whole exchange fund, it's only 1.7%. Mr. Wong, in terms of foreign exchange, we did make a lot. In 2002, 2003, we earned more than $50 billion per year. At that time, the exchange fund was smaller. In 2002, it was 2.8%, and 2003, it was 2.3%. When the US dollar is weak, our foreign currency denominated assets appreciate in value. When the US dollar is strong, then the foreign currency depreciated assets decline. It's hard to make accurate predictions of the foreign currency market. We adopt a diversified approach. We do not just say if we are bullish about the dollar, we put everything denominated US dollars, and if we are bearish on the US dollar, then we put everything in non-US dollar assets. That's not our strategy. Now, we may lose in our foreign exchange sometimes, and we may win sometimes. On the whole, we can break even. In the past 10 to 15 years, in terms of foreign exchange income, the number of good years are as many as bad years, and we are able to break even in terms of foreign exchange. Will you change the weighting in your 5 areas of investment? Well, we do review our portfolio every year. We will make suitable adjustments to our portfolio. In terms of asset classes, there will be changes, bigger changes. In previous years, we may change our foreign exchange allocation. We may change the weighting between equities and bonds. As the bonds, we may make some changes in terms of the maturities, but we will not make substantial changes with great magnitude in a year. Otherwise, if we make the wrong move, then the loss will be even greater. Mr. Sin Chung Kai, I have 2 questions. How do you look at Greece? It's a small country, but the new government is asking the whole of Europe to cut their loans. Now, if the credit risk, credit default risk, if there is a default of credit, what will be the consequence? Will there be a small crisis or big crisis? And if it leaves the Eurozone, what will be the impact? And what will be the impact on Hong Kong in particular? Now, several countries are doing QE. Say, US has finished that. Europe is now doing that until September next year. And Japan, they are doing it. And recently, even the mainland is suffering from pressure and is going to do some QE. Now, with QE in the mainland, many members have spoken about currency war, and the Singaporean dollar has depreciated. There is pressure on the renminbi, and the renminbi deposits in Hong Kong amounted to more than $1,000 billion. Since 2010, the renminbi rose from 6.8 against the dollar to 6.1 against the dollar. Now is about 6.2 something, and the renminbi is declining. If there is QE on the part of renminbi, will the renminbi depreciate, and what will be the impact on the more than 1,000 billion deposits of renminbi in Hong Kong? Thank you. Time is limited. I'll try to be brief. Greece, as an economic entity, 10 million population, it's just several percent of GDP of the Eurozone. It's not too big.
This time, through the election, a new left-wing radical political party came to power. Well, the Eurozone doesn't just have to handle the case of Greece. In yesterday's news, we saw that in Spain, 100,000 people took to the street to ask why couldn't they do the same as the Greek. And in Portugal, Spain, and Italy, there were also austerity measures, and their people had suffered a great deal. Now they're saying that as Greece can renegotiate with its creditors, and if Greece is not to repay their debts, so what will happen? We're rather worried in future whether or not Greece voluntarily or is forced to be separated from the Eurozone, the impact will have to be studied. But whether or not there will be a domino effect on other Eurozone jurisdictions is rather worrying. And then we're asked about deflation. In Hong Kong, it's rather simple. We have the US dollar peg. In the past, the US dollars were weak, we were rather worried, but now the US dollar is strong. In Hong Kong, many depositors don't just eye inflation. Last year, against renminbi, there was an inflation of or appreciation of 10%. So we have to adopt a long and medium term approach when we view renminbi. So in that regard, I don't think Hong Kong will be hugely affected. Mr. Chan Kam Lam, this year in Mr. Chan's report, he mentions the property market. In the past, Mr. Chan always sounded an alarm. For example, he would remind us that the American interest rate might go up. But this time, apparently, he touched very little upon that. For property prices, last year and the year before last, the administration launched some harsh measures. Still, property prices have been soaring. Besides, small area or small size flats have experienced an even higher escalation. So for the grassroots, for the low-income people, they had to bear a heavier burden. So I wonder whether there'll be any adjustment in terms of our monetary and fiscal measures such that in future homeowners can still bear the risk. Because just now we learned that risks will be high because there are huge uncertainties in the global financial market. Besides, I don't think interest rates will remain on a low level forever. So I'd like to seek Mr. Chan's advice in this regard. Mr. Chan? Well, all along I've been saying that interest rates will rebound from a very low level. But this year is very different. In the past, we envisaged QE measures, and then QE tapering, and then increases in interest rate. Well, even this year, the U.S. did say that interest rates might rise. Well, originally, they forecast that to happen in June or July this year, and now they're saying that might be delayed for a couple of months. But the recent saying is that interest rates may rise even in June. So it's more likely this year than ever that interest rates may increase because the U.S. may start its cycle this year. And if the U.S. starts to increase its interest rates, our property prices will be affected. Now we have very active property transactions at the moment. If the property market continues to prosper, the Hong Kong MA may have to adopt certain measures, but we have to observe the situation for quite a while before we can make a decision. I think the Hong Kong MA should act quickly. It may be too late when you see the phenomenon surface. Now property prices are ever rising and we don't actually see the future direction. So there is a crisis here. I believe the Hong Kong MA should do some macro adjustment. But in terms of financing, if we don't act expeditiously enough, it may be too late. I've heard your view. Mrs. Regina Ip. Mr. Chairman, I have two questions. First of all, about the rate of return for investments. This year, the performance has not been very ideal. Mr. Chan said that the market had been very volatile and difficult to forecast. Well, that happened every year, and we suffer from a deficit. So what strategies are there to stabilize our return? Are we going to just rely on your long-term portfolio? Any other strategies? Besides, I raised this with Mr. Chan, that some foreign exchanges told me the Financial Action Task Force of G20 set higher and higher requirements for foreign exchanges. They told me that many banks did not accept them in the opening of accounts. So what can you do to help them? Mr. Chan, there are two questions here. Investment difficulty. Well, I think in the past couple of years, investment has never been easy. Last year, it's difficult. This year, it will be even more difficult. I'm not trying to find an excuse. Members will recall that the American economy has gone through a number of cycles, property cycles, financial cycles, and so forth. But never before did the USA have such a local risk. Interest rates remain at zero, and then the informal or irregular fiscal policies. Well, this is a rather distorted market and currency market. So where the U.S. is experiencing something unconventional. As for the foreign exchange in Hong Kong, we are different. We're a different body. We're a statutory body. Our purpose is to maintain monetary stability. So we have to have a huge volume of U.S. liquidity. You see that back in the financial turmoil, we offered unlimited guarantee for banks. So Mr. Chan can rest assured, Mrs. Ip should rest assured that stability comes first for us and return comes second only. My colleague can supplement. Mr. Chairman, in the past couple of years, every now and then, we heard the same view. Well, there are two parts here. Some banks experienced anti-money laundering requirements in overseas jurisdictions, which affect bank businesses. And some multinational banks have chosen to be more prudent. So globally, banks have been reducing their cash-related businesses. Besides, the global requirements for anti-money laundering activities have become stricter. So, rules and regulations have been tightened. I believe we can handle the situation. We've asked the banking sector and the foreign exchanges to discuss among themselves whether or not they can come up with some basic arrangements. Well, the process is still underway. At the moment, I have nothing material to report, but will continue to serve as a coordinator. Mr. Kenneth Leung. Well, 2 questions here. Risk of the foreign exchange. Will you have short-term hedging to reduce the foreign exchange risks? If not, why not? My second question is about slide 20. In relation to retail payment development, in relation particularly to the Clearing and Settlement Systems Amendment Bill. The industry asked me a technical question recently. If the stored value, well, it's different for the stored value to be stored in the card or stored on the cloud. That is non-transferable stored value in the card are handled differently from transferable stored value in the cloud. Will you link that up with a deposit-taking company? Will you adopt that modus operandi? I'll defer to Eddie for the question and Peter for the second question. Well, a simple response. As we mentioned, in terms of currency arrangements, we conduct annual reviews. Hedging, the purpose of hedging is to reduce the amount of foreign currencies in our hand, but we'll make adjustments, but not hefty adjustments. Otherwise, there will be huge risk. So basically, that's our practice. Concerning the bill, under the existing banking ordinance, we use a card-based system to manage the transactions of stored value. And this time we would like to expand the scope to non-card users and their assets. Well, basically, the processing details are the same, but there are 2 principles. First of all, the stored value must be separated from the other capital of the operator. Now, this is clear. So for the non-card users, the same principle is adopted. For a payment system linked with other businesses, basically, we regulate the payment system only. If there are non-payment businesses concurrently, then a prior consent must be obtained from us. Well, time is limited. Very simple. For card and non-card stored values, they're put under the same regulatory framework, right? Whether or not the stored value is in the card or in the cloud. You just have to confirm my remark or my understanding. And now understand that so long as the money is separated in terms of a trust, will you upgrade that to a deposit-taking company level? Well, yes. The answer to the first question is yes. Whether the stored value is in the card or is a virtual stored value, the regulatory regime is the same. Under the banking ordinance, if you take another person's stored value, be it $50 or $100, that's public money. For the bank depositors, we protect their safety. But who are to protect these card holders? In the past, the banks must be deposit-taking companies. But in fact, in this particular case, it's not really bank deposits. It's cards that matter. So we have electronic regulation such that we we can protect the safety of the public's deposits. It's just that we're not using the banking ordinance to do regulation. Mr. James Tian, indeed, the Hong Kong MA has a lot of functions to regulate banks, to protect the interest of the depositors, and so forth. Another role of the Hong Kong MA is to hold our reserves and exchange fund to the tune of $3 trillion. So members of the public are very concerned about the rate of return because the money earned by the Hong Kong MA, part of it will go to our Treasury, such that every year the Financial Secretary can prepare his budget. If your investment result is poor for a certain year, then the FS will get less from you. And then in the budget, we'll have to spend less on certain items. Well, if we're not to sacrifice the livelihood-related items, then we have to axe, so to speak, the business sector. So I have this question for the Hong Kong MA. I understand that we need to adopt very prudent principles in managing our finance. When I look at my small company, last year investment was not my main activity, but still my rate of return was better than yours. So I'd like to know, is it because of the rules and regulations that your investment is subject to too much constraints, such that you lose flexibility? You see, in overseas countries, they make profits whether or not the market is good or bad. So, from that angle, can you do something such that you can be more aggressive in terms of rate of return? You see, the MPF has been scolded severely by the public. Well, in overseas jurisdictions, they operate in terms of funds. But if we adopt that modus operandi, will we be repeating what the MPF has been doing? Mr. Chan, for investment return, there are bound to be ups and downs. We adopt a 6-year average policy. Last year's 3.6%, higher than the 1.4%. So for the 6-year average, there's not been too much fluctuation. Well, individual investors may have higher rates of return, but these investors are not under a statutory fund. Bear in mind that this is the foreign exchange fund, and it doesn't belong to the SARG or any individual. We must make sure that we have sufficient resources to maintain stability for our monetary situation, such that we can have a strong enough backup pool of funds. That's why our investment policy is inclined to be conservative. In recent years, the international market has been distorted. Normally, the return should be 5%. Now it has dropped to 2%, and sometimes it's even 1%. So, by way of a stable bond structure, we've arrived at a 5% rate of return, which is, well, so-so. Well, that's what we can do at most under an unstable investment environment internationally.
Mr. Leung Sing, well, I don't know whether somebody has already asked the question I want to ask because I've been attending another meeting. Anyway, I'll try my best. And Mr. Chan, I thank you for the presentation. Your paper has more than 80 pages. Now, I'd like to say that I agree that because of the changes in the QE policies, we have seen more uncertainties. Now, from the first, second to third quarter to October, November last, the growth has moderated from 22.9% in the beginning to around 6% in October, November. I wonder if this moderated growth is healthy and whether there is any hint or sign for the banking sector. The overall growth of 6.7% last year, in my view, is a stable growth, because normally the individual banks may have their own policies in the beginning of this year. The strategy may be more aggressive, and the figure may be higher in the beginning of the year. And I'll defer to my colleague to say more. Now, in terms of growth in bank loans, what factors contribute to the growth? Both demand and supply affect growth of bank loans. In the second half of last year, in particular in the fourth quarter, demand for bank loans eased. But we can't say whether this is good or not, because growth and demand should in the long run be at a sustainable level. If at this stage we can still, our banking sector can still expand the credit at a double-digit growth of up to 20%, then there is a problem with the supply not catching up with the demand. With more rapid growth in the past few years on credit expansion in the second half of last year, banks have become more prudent in approving credit applications because of higher demand for housing at the same time, and mortgages at the same time. I think the most important point is to watch closely risk management. Now, I have a question on the aggregated balance. Now it's standing at a high level, $240 billion, and it has remained at such a high level for the past few years. In the past, the average used to be $600 to $700 million, and this is far excess of this level. With the tapering of QE elsewhere, will the Hong Kong MA gradually press down this level to a reasonable one, so as to prevent a sharp shock of a drastic fall? Well, the aggregate balance is part of our monetary base of our banking system. In fact, it's more than some $300 billion. It's $1,300 billion. This is not the normal situation, because as far as currency bond is concerned, well, in the past few years we've continued to develop, and the figure has now become $1,300 billion because of inflow of U.S. dollars, and these funds may gradually go out of Hong Kong, and this is exactly the buffer. When U.S. interest rates goes up, well, the funds may flow out of Hong Kong, which forms a base here at the moment, and this can help act as a buffer to stabilize the situation. No follow-up, Dr. Lam Tai Fai. Thank you, Chairman. As we all know, the mainland has been striving to promote renminbi as the international currency, and Hong Kong has been playing a very important role in terms of offshore renminbi business, global clearing and settlement, etc. We play a very important role, and Mr. Norman Chan mentioned in his presentation that in terms of settlement in the various trades, we have seen growth in using renminbi as the currency. Last year, the conversion limit for renminbi was scrapped, so I anticipate that in terms of using renminbi by individuals or by corporations, the frequency will continue to grow. We can see very often that retail outlets and restaurants now accept the use of renminbi for payment. So it is of course reasonable for renminbi to become more and more important. But will Hong Kong dollars as a result become marginalized? Because we use renminbi more than in Macau, they use renminbi more often than the currency of Macau. So we are a capitalist society. It is only reasonable that more and more renminbi will be used. But what about one country, two systems, and the image of Hong Kong? And will that suffer a blow? I'd like Mr. Chan to comment on the future of Hong Kong dollars. Well, on the issue of whether Hong Kong dollars will be marginalized as renminbi becomes more and more globalized, the answer is that there is no need to be overly concerned. In fact, when we go to Macau and we make consumption or play in the casino, we use Hong Kong dollars. In fact, if conversion of currency is necessary, this will increase your costs and thereby reduce your sentiment for consumption. Similarly, when mainlanders come to Hong Kong, of course, they would like to make consumption with the use of credit card or renminbi. So naturally, shops would make it more convenient and accept renminbi from mainland tourists. And some shops also welcome Japanese yen, US dollars, or other foreign currencies. And this can really help increase sentiment for consumption. Now, the real worry should begin when locals start to use renminbi instead of Hong Kong dollars in their daily transaction. And so far, we don't see this happening yet. For the circulation of Hong Kong dollars, the daily amount is some $300 billion, and so far we haven't seen any sign of Hong Kong dollars being marginalized. However, at the same time, when RMB becomes more and more globalized, and there will be more and more renminbis in Hong Kong, and of course, with increase in renminbi deposits, there is an expectation for renminbi to be appreciated, and there is also another consideration of having more deposits of renminbi instead of other foreign currencies like Australian or US dollars. I'll draw a line here if no other members would like to ask another round. Mr. Sin Chung Kai, 3 minutes. Chairman, I won't ask a question. All right, and then I have a question. Mr. Chen. Well, the global market is highly volatile. Oil prices, Russian ruble, other foreign currencies which may be depreciated, whereas locally for property prices they continue to go up. for somebody with so much experience in investment, what advice would you give to prospective investors in the property market and consumers? Well, let me talk about consumers first. If consumption is only made by taking out loans such as credit card, then one must pay attention to changes in interest rate. Now we're in a low interest rate situation, but the U.S. interest rate may be normalized. As for investors, the situation is different. They may purchase a lot of assets, for example, in the property market, and so far the mortgage lending rate is just 2% or so. It's still very attractive. But as I said a number of times before, the interest rate is at an abnormal situation caused by a distorted environment, global environment. And as I hinted a number of times already, that it's just a matter of time within this year that the Federal Reserve will increase the interest rate. So if investment is made based on lending, then you must pay. You must make sure that you have sufficient liquidity in case of changes in interest rate. So the public should also pay attention to Mr. Norman Chan's remarks. We still have some time left. Dr. Kenneth Leung, last round. Coin collection program. I also took part in it. I found it very convenient. Well, overall speaking, in the long run, this will be the global trend. My question is whether you have any plan to increase the number of vehicles for the coin collection program, because I see members of the public lining up in a long queue in housing estates. Now, secondly, it is a global trend that eventually coins will be phased out in 5 years or 10 years. Do you have any idea, or do you have any vision that eventually coins will be phased out from our currency system? Mr. Chan? Well, about coin collection vehicles, well, we're happy to see that there have been such a keen response. However, we need to convert the vehicles, we need to recruit staff, we need to start a tender exercise. On completion of the pilot program next year, we will review and see if we need more vehicles or whether we need more improvement measures. Maybe in the first couple of years, it may be more popular. In the next 2 or 3 years, if we have too many vehicles, it may cease to become popular because of a drop in demand. As for phasing out coins, this is an interesting situation. We see in the market all forms of electronic payment, credit card, octopus, but there are still vendors using coins for transactions, for cost effectiveness. Newspaper vendors is one example. The point is, after using coins as change, members of the public may just put the coins at home without using them again. That causes a problem with the circulation of coins. I anticipate more and more forms of e-payment, but we cannot really they cannot really take the place of coins. But this inevitably will be the trend. Thank you, Mr. Chan and your team. That's the end of this agenda item. Next item, the 2015-16 annual budget of the SFC. Let's invite the representatives of the SFC in first.
喂，係喎，你唔記得提你上嚟添，好彩你上嚟。我想趌下即趌。係啱啊，啱啊，唔係你手裏個統攝。啱嘅呢個策略。係啊， 好啊，我哋歡迎咧係財經。
Let's welcome representatives of the FSTB and the SFC for attending the meeting. And I would invite Mr. Carlson Tong, Chairman of the SFC, to walk us through the paper. So please try your best to conclude your presentation in 10 minutes. Chairman, members, good morning. To facilitate Mr. Alder's listening to my presentation, may I be allowed to speak in English?
Panel. Today I have the pleasure again of discussing the honourable members the SFC budget. I will briefly introduce a few key elements in our budget before moving on to address questions the honourable members may have. Our overriding objective is, of course, to ensure that essential regulatory initiatives and our ongoing operations are adequately resourced to fulfil properly all our regulatory objectives under the law. A further 2-year licensing fee holiday and the transaction levy reduction were implemented respectively in April and November last year. These two measures have a projected cost totaling $290 million, necessitating a heavier reliance on the reserves as a funding source for our operations. A deficit of $225 million is forecast for 2014-15, which will reduce our reserve to $7.091 billion. In 2015-16, deficit for the year will be $417 million, and our reserves are projected to reduce further to $6.674 billion, approximately 3.8 times SFC annual costs. I should stress that the initiatives and headcount requests in our budget are crucial to keep us on track with our regulatory objectives and necessary to ensure we are adequately resourced to maintain efficiency and protect investors. The size of our reserves has no bearing on these decisions. Since 2006, the transaction levy rate has been reduced 3 times to the current level of 0.0027%. At 0.005%, the original level before the first reduction, the levy income would have been more or less able to support the SFC operational needs. Despite an operating deficit since 2012-13, we implemented a levy reduction of 10% last year to alleviate investors' burden, thanks to level reserves that were largely the result of levies collected during a period of very high market activity between 2006 and 2008. The reserves have now been funding our recurring operating deficits for 3 years, with the current much lower levy rate of 0.0027%. A budget deficit is expected to continue over the foreseeable future unless the daily market turnover increases significantly, and our reserve will continue to diminish. Major financial reforms such as over-the-counter derivatives regulation, the resolution regime, and cross-border supervisory cooperation are being taken forward. Shanghai Hong Kong Stock Connect is a major breakthrough in integrating trading platforms between Hong Kong and the mainland. Other key initiatives also relate to Hong Kong and mainland integration and Hong Kong position as a renminbi hub. Chief among these are mutual recognition of funds, expansion of RQV, QV, and expansion of Stock Connect. Changes to headcounts always follow a detailed critical review of manpower needs. All the proposals in our budget have been approved by the Board's Budget Committee. This year, we've proposed a net increase of 39 full-time posts. Our headcount increases principally relates to the need to reinforce 2 vital operational divisions, intermediaries and enforcements, whose work has grown in complexity and volume. The 12 new posts in the intermediaries division will enable the adoption of more outcomes-oriented and judgment-based supervisory approach, introduce greater specialization and policy capacity. Changing market practices such as internet distribution and sales platforms, electronification of markets, greater supervisory intensity with respect to anti-money laundering, and more proactive inquiries by intermediaries' fitness and properties have all led to high complexity of the division's work. These factors, coupled with the increase in number of licensed corporations and of regulated activities they are licensed for, have placed high demands on experienced professional staff members. Our enforcement division proposes to create 15 posts. Investigation caseload has increased by 43% to date in 2014-15, and total man-hours spent on cases by 17% to date relatively to whole 2013-14. At the same time, cases become more sophisticated and complex, in particular corporate misconduct cases that may entail getting evidence from other jurisdictions and challenges in locating defendants and assets and involve multiple lines of inquiry. With this year's proposed addition, the various teams within SFC will have the necessary structure in place to cope with the anticipated demands of our work. Therefore, we do not expect any material change to staff strength unless there is significant change in the scope of work or in the regulatory environment. The SFC has always endeavoured to redeploy internal resources in meeting increased or changing demands to the extent that we are able to achieve the desired regulatory outcomes. We have set aside $9 billion for 2014-15 forecast for funding training initiatives for intermediaries, particularly small and medium-sized firms. This includes a proposed funding to the Hong Kong Securities and Investment Institute for its proposed e-learning platform. This year, we have again earmarked $15 million to extend these training initiatives. We note the comments about the potential high level of market activity around the launch of Shanghai Hong Kong Stock Connect, and the natural question raised about the likelihood of higher market turnover and high levy income that may accrue to SFC. We have been monitoring the pilot closely. We have yet to see a clear trend of increasing turnover directly linked to it. We have made realistic income projections based on prudent assumptions. Finally, I would like to assure honourable members that the SFC is committed to upholding the integrity and reputation of the securities and futures market, as well as creating an environment in which Hong Kong's market can continue to develop and anchor its role as a major international financial centre. The resource allocation as proposed in our budget will allow us to deliver this. We will be delighted to answer any questions from honourable members on our budget. Thank you.
Thank you, Mr. Tong. Can you give us a copy of your speaking notes so that members can have a quick look? You can give the copy to our clerk. I now open the floor to members. Those who are in the line, Mr. Sin, Mr. Leung, Mr. Chung, Mr. Tong, Mr. Chan, 4 minutes each. Questions and answers included. Mr. Sin Chung Kai. Thank you, Chairman. May I thank the SFC for coming. I've noticed that in the coming year, in your budget, you will invest $63 million on the Investment Education Center to promote education of investors. I support this. My question is, starting from November last year, there has been the Shanghai Hong Kong Stock Connect. Has the SFC stepped up publicity so that investors investing via the Stock Connect may have to bear certain risks? Have you tell people what the risks are, what risks are involved, and what are the differences between the two regulatory regimes? Have you stepped up educating the investors? In the past year, there is the issue of investment-linked insurance. In terms of this, have you received any complaint of investment-linked insurance? The council, the Legislative Council, is now handling the setting up of the IIA in respect of approving investment-linked insurance. What will be the division of labour between yourself and the future independent insurance authority? In terms of supervision and investigation, what is the division of labour? Is there any agreement or consensus? Mr. Tong. I thank Mr. Sin for his 2 questions. The first one is on investor education. I fully agree with Mr. Sin that investor education is very important. With the before the introduction of the Stock Connect, we put in a lot of resources on helping investors to understand more in respect of the implications investing to the north. Mr. Older can give you more details. Mr. Older, please.
Yeah, sure. And you're absolutely right. The education around this is very, very important because under Stock Connect, it's a trading link. But of course, investors investing through the trading link into mainland China stocks take effectively a mainland China risk. So as a result of that, the Education Centre has launched a specific program around, which is radio, also print, and they have a sitelet on their website, which is all around education under Stock Connect. And that, of course, will have to continue because it does take a lot of effort to enable messages to get through to the investing public. And by the same token, the Investor Education Centre also has an arrangement with the mainland authorities about collaborative education around Stock Connect. Shall I deal with the second question about ILAS?
Yes, ILAS.
Yeah, sure. Look, in relation to ILAS, a lot of concerns were raised, in particular, around 2 years ago, certainly mid-2012, by ourselves, amongst others, about ILAS and whether ILAS ends up with fair outcomes for consumers. A lot has been done since then by ourselves and by the Insurance Commissioner and by the HKMA in order to effectively revamp the ILAS market. And in particular, last year, we put in place our product design guidelines, and so did the OCI. So a lot's been done, and also around commission disclosure. We are going to review that with the other regulators this year. And as a result of that review, I would expect there will be more discussion about who regulates who. But the current position is that the point of sale regulation, in other words, the agents and brokers and banks that sell to the public, are regulated by, on the one hand, the Insurance Commissioner, on the other hand, the HKMA. But certainly going forwards, as we look at a new ILAS environment under the new regulations which have now been introduced, we'll have to think carefully about, ultimately, about who regulates what and who.
Mr. Christopher Chow. Thank you, Chairman. The industry, with regard to the efforts made by the SFC in maintaining stability and development of market, we want to show our appreciation. And in fact, the license fee holiday has been maintained, and that helps us a lot, and we would like to thank the SFC. With the introduction of the Shanghai Hong Kong Connect, that may be followed by the Shenzhen Hong Kong Stock Connect, mainland investors will have more channels of investing into Hong Kong stocks. Their understanding of corporate governance, their understanding of our rules and regulations may not be very thorough or good enough. We support, of course, the measures of investors' education. Now, you want to retain your staff, and you have a special arrangement of $19 or $18 million to retain your outstanding staff members. Concerning the $17 or $18 million, how do you come up with this number, and how would it relate to salary adjustment? Is it a one-off adjustment, or is it a regular adjustment? Now, concerning your definition of talent, we want to know your definition. Does it mean that they are harsh on the brokers, and if they prosecute the brokers more, then they are more outstanding than their talents? We have some questions about it, and I hope the chairman can give us a clearer explanation. My second question is this. I've noted that in this year there is an increase of 14.4%, amounting to $1.7 billion. Now, in Chinese, as the saying goes, you should cut your expenditure and find more sources of income. As an international financial center, you need a head office in a grade A office building. But what about your back office departments or divisions? Can they be relocated in second line, say, grade B offices, so as to reduce your rent expenditure, so as to reduce your deficits? Mr. Tong, Thank you, Mr. Chung, for your appreciation and support. Concerning the $17 million reserve, we have done a lot to study the wastage rate among our staff members. We focus on the younger staff members. They have gathered adequate experience. They are about to move up, and they have the highest wastage rate. The wastage rate in this band of staff members range from 8 to 12 or 13%. The $17 million aim at these younger staff members who have higher wastage rate. It's easy for them to get another job outside the SFC after they have worked for us for several years. If they leave us, we have to recruit new bodies and we have to train them up. The cost is even more than retaining them by $17 million. Chairman, concerning the $17 million, are you going to do it every year? It's not for every year. Last year we didn't do it. We did it the year before last. We focus at the wastage rate. If it has become stabilized, we will not do it. And we don't need to spend all $17 million. It is a budgeted amount. There are several questions. I'll give you some time later. Let's move on to next member, Mr. Kenneth Leung.
There's a question concerning the auditing profession, and I just want an update on, first, how would you deal with the regime of confidential information when a Hong Kong auditor tries to audit the company of China mainland incorporated entity, and if they encounter something called confidential information, how could they go around it? And also, would you, in the very near future, will SFC enter into a protocol or memorandum of understanding with the PRC Security Commission to enable Hong Kong auditors to examine the underlying working papers of any PRC auditors? I mean, these two questions are different but related issue. Thank you.
Hi, perhaps I can answer the Honourable Legislative Member Mr. Leung in English. Now, you're absolutely right. This has been a challenge that we've been facing in terms of access to information, especially working papers of auditors over the last few years. You would have noticed that we had, in fact, involved in litigation with one of the big four accounting firms on exactly that issue. In fact, we now have been, over the past year, engaged in very detailed discussion with CSRC, including the chairman, and we are committed, or both of us are committed to finding out a resolution to move forward on this issue. In fact, the MOU, enhanced MOU we signed with the CSRC as a result of Shanghai Hong Kong Stock Connect is a good starting point. Obviously, that is restricted only to dealing within the Shanghai Hong Kong Stock Connect, but it provides a good basis and more trust in helping us to be able to deal with some of these other issues. In fact, we have agreed with CSRC chairman to go and visit him on a more regular basis. And one of the agenda items is this access to working paper and state secrets. Ashley, do you want to add anything?
Well, not a great deal, but other than to say that it is obvious to us that there needs to be a solution. And we've also decided or committed to work with the accounting profession towards a solution, because frankly, in the long term, litigation over this is not particularly helpful. There needs to be a clear answer. So working with the profession and working with the mainland authorities on this is very important.
Yep. Can I follow up? I mean, I probably understand from a conversation that could be a further MOU to regulate, the auditing professions cross-border. But would that further enhancement or, streamline of the regime dependent upon a final decision of the court case, which is still pending at the moment?
Well, I think that not necessarily. I think there are two separate tracks. The court case is still pending, and therefore I can't really say anything about that in detail for obvious reasons. But so far as the broader issue is concerned, our intention is this year, as the chairman said, to work with the profession and also with the mainland authorities to seek a solution. And ultimately, that's around far greater clarity, so far as mainland rules are concerned, about the type of information we're talking about, the state secrets issue, which is associated with this, and really importantly, the mechanism by which listed companies or companies wishing to list and their advisors are able to identify the information and put them through a process in the mainland to give us certainty in Hong Kong. But it is a really, really important issue for this year.
Yeah.
Mr. Ronnie Tong, I'm also concerned about the budgets this time. The reserves of the SFC are adequate. In fact, it's flooded with money. I think this is not really healthy. When you want to increase levy, the market conditions may not permit you to do so. And this may not be favorable to the development of the market. Now, you have increased your expenditure by about $160 million, and your budget, your deficit will be about $400 million. Do you have confidence in reversing the trend of increasing deficits? My second question is about the Stock Connect. In fact, you're making losses. Our benefits are far less than those gained by Shanghai. And our responsibility of regulation and the resources on regulation are increasing substantially. In terms of the Shanghai Hong Kong Stock Connect, in terms of such transactions, will you increase levy on such transactions? The increase of levies on such transactions may not affect our market development, but it is fair to us because we are making a losing business. We are doing a losing business because the cost of regulation has increased substantially, yet the gain in our market is far less than that of Shanghai. Mr. Tong. Thank you, Mr. Tong, for the question. I'll answer the first question, and then Mr. Older will speak on the Hong Kong Stock Connect. Concerning the reserves, we have deficits this year, and we'll continue to have deficits because the levy rate was 0.05%, and now is just 0.027%, and therefore it can maintain our daily operation so that we can do what we should do. Now we can continue to go on like this because in 2007, 2008, the fluctuation in the market enabled us to accumulate a lot of reserves, and we are still sitting on the reserves. According to our latest estimate, we still have 5 more years to maintain our reserves at a level no less than 2 years expenditure. Unless there are wide fluctuations in the market, we are able to cope. Our plan is that because of the Stock Connect or other factors, the transaction volumes increase. Then after 4 or 5 years, we can balance our books. If we can't do it, then the only solution probably will be the adjustment of the levy.
It's a good question. I think what is being alluded to is that so far, in the just over 3 months since Stock Connect was launched, the volume of northbound trade, in other words, trade into the mainland, is in excess of the volume of southbound.
My question is it feasible to impose a special levy in relation to the Stock Connect?
Well, it may be feasible, but it's certainly not is on the cards right now. Overall, in relation to Stock Connect, and the reason I was talking about it's been launched for 3 months, we see it now as a pilot program. We will be doing a comprehensive review of the whole program 6 months after launch, so that'll be quite soon. We'll certainly, given you've raised the question, consider the question of levies, etc., in that context. But right now, there are no plans to have a differential levy for Stock Connect in comparison to the normal levy that we charge.
Okay, Chan Kam Lam.
Mr. Chan Kam Lam. Thank you, Mr. Chairman. I'm also looking at the reserve. Now this year we have around $6.6 billion, and every year we're suffering from a deficit of around $400 million. Mr. Tong said that in about 5 years' time, our expenditure will double. So now we're having the yellow light, not yet red light. Well, 5 years will pass very soon, and it's very difficult for us to forecast market fluctuations. So it won't take us too long before we eat up all our reserves. So you have to make preparation from your paper, from the SFC ordinance. You only adjust the levies when the expenditure is doubled. Now, the present situation is not healthy. On the one hand, our expenditure cannot be reduced because you have to maintain the strength of regulation, the manpower level, or even rent. Every year we spend over $200 million on rent, $1 billion in 5 years' time, $2 billion in 10 years' time. I did suggest that you purchase your own offices. Money is leaking away. So you should study whether or not you should own your own property. I'd rather spend billions of dollars in one go and then save a great deal of money thereafter. Then you'll be able to balance your books. At the moment, the situation is very unhealthy. We all know that every year you are losing $400 to $500 million. So I'd like to know whether or not the government and the SFC will further consider my suggestion. When your tenancy agreement with Cheung Kong expires, will you contemplate owning your own offices? Mr. Tong, I agree with you. Given the present losses, unless the market adjusts very drastically, 5 years will pass very soon, and every year we're going to lose $400 million. We will consider how to reduce our deficit. Yes, we do bear in mind that this tenancy agreement signed with Cheung Kong in 2012 will be able to leave in 2017. So we will consider whether there is a possibility of owning our own property, maybe not comprehensively, not in the city center, maybe in more remote areas. We're willing to consider all those options. 2017 will come very soon, but still we have 2 odd years to come, so we'll conduct the assessment. Mr. Chan? Mr. Chairman, I think they have to expedite their work in this regard. Part of their work needs not be carried out in Central District where rent is high. They can opt for cheaper areas, more affordable areas, then they can reduce their deficit gradually. Mr. Ong Leung Sing? Thank you, Chairman. Concerning the discussion just now, well, if their reserve is to be eroded gradually, I'm a bit worried. I have a question here. Previously, you did not have Stock Connect with Shanghai, not with Shenzhen either, and the Shanghai-Hong Kong Stock Connect just started, well, not too long ago. Can you tell us your achievements in the past few months and how will that impact on the levy rates? Just to give us some figures. And what sort of forecast do you have in terms of the possibility of rising levy rates? Mr. Tong, well, the Honourable Member was correct. Stock Connect started on the 11th of November. Investors came southwards, and basically it's because of the interest rate on the mainland is declining that there's an impact on the Hong Kong market. In October, the daily average turnover is $68 billion, and then it increases to $79 billion. And then by January, dropping again to $90-odd billion from $105 billion in December. So there has been huge fluctuation. Well, if you look at the average turnover, it's $74 billion. Our budget forecast was $78 billion. I think our forecast was correct. How will the market go? We have a lot of uncertainties. So we've tried to be more conservative. We would like to strike a balance in formulating our budget. It's difficult to say what will happen in future. In the next few years, when the turnover is larger for Stock Connect and when more mainlanders come to invest in Hong Kong, we may have more profits and that may help with the levy rates. Well, what about the investment strategy for your reserve at the moment? Mr. Tong, about a year ago, we decided to set up an investment committee to oversee our investment options. We had a year's preparation, and now we've selected four fund managers. They just started. Of course, we have to be conservative in our investment, and the government does set a restriction for us. No more than 15% should be invested in equities. As for the remaining 85%, we should have fixed income like bonds. So we have to be very careful and prudent. Second round, Mr. Sin Chung Kai, 4 minutes. Mr. Chairman, just now the CEO forgot to answer my question on ILAS. You said that 2 years ago, 2012 that is, you already had some internal warnings or alerts. So you did something in the past 2 years. Can you share with us, insofar as the SFC is concerned, insofar as investment is concerned, well, there may be a slight percentage of insurance, but how many complaints have you received in the past 2 years in terms of ILAS? And what about those internal alerts or alarms? What did you do on those alerts?
I don't have statistics for the complaints on ILAS with me here, but I can certainly get them to you. There have been complaints. without any doubt. What we have done over the last 2 years is work together with the Insurance Commissioner and the HKMA, mainly in two respects. From our perspective, as an organisation which has a regulatory responsibility to authorise products, from a disclosure perspective, we introduced product design guidelines at the beginning of last year. They have been used at the end of last year in order to ensure that new ILAS products conform with those guidelines, which is quite a major change. So that is effectively what we have done. So far as Commission disclosure is concerned, the Insurance Commissioner as well as other regulators have decided on Commission disclosure at a product level for ILAS, and that again is kicking in this year. So that's what's being done to date. But what I would emphasise in relation to ILAS is that we need to keep the situation under review, which is why I mentioned earlier on that the three regulators have committed to discuss and meet regularly on how ILAS should be looked at going forwards. We are not involved in the debate on the insurance authority, but clearly it will be relevant to that debate as well.
Now, for these regulatory bodies, is there a possibility of reaching consensus? And what about your future division of work? Can you give us more details about ILAS?
I mean, we haven't reached a consensus on the future division of work yet because we want to see how the changes that have been introduced last year and came into effect this year affect the product, how the product is affected. There is some evidence, I believe, that the insurance element in any event of these products is increasing. So we'll see how the product develops over time to decide ultimately on the sort of regulatory structure in relation to that, but there's no decision as yet.
At the moment, the LegCo is studying the piece of legislation on insurance. In the past, when we discussed the SFC and the SFO, we did discuss this system of one industry being regulated by two regulatory bodies. Are you going to adopt the same approach for insurance products? And will you try to reach consensus first before you introduce the piece of legislation to us? I think you should be introducing the law to us this year. Can you beat the timetable? Oh, you would like to answer? Yes, perhaps I should answer. As Mr. Older just mentioned, the regulatory bodies are now discussing the issues. In actual fact, some of their discussion results previously had been implemented, for example, in terms of disclosure, making documents more readable and easier to understand, etc. In future, how will the division of work be among the regulatory bodies, including the IIA? I believe they'll try to forge clear consensus. And after the enactment of the bill, we can work on the details. If we need subsidiary legislation and other details, we'll proceed to work on those. So when everything is ready, we'll proceed with the IIA. The IIA will only operate after all these are done. So you cannot tell us the details before we enact the bill. This is just like a question of egg first or chicken first. We want to know the future division of work among the regulatory bodies. Ms. Yan, as Mr. Older just mentioned, we need to gauge the development. Of course, before the law comes into effect, we must have clear division of work. An MOU may be a useful tool. That is, to use an MOU to lay down the division of work. We will absolutely consider that. Well, maybe you should now answer our Deputy Chairman's question. What do you mean by good staff members. And what about backup tasks? Can they be relocated? Mr. Tong? Well, we have different departments, the regulatory division, intermediate division, corporate finance, etc. Every employee has his or her own merits. So we don't have any, well, we have a standard system to assess our staff members. First of all, we'll see whether or not they're good performers. And then if in a particular division we have a particularly high wastage rate, then we'll try to compare ourselves with our counterparts. And then we'll see for those professionals what the average starting salary is. If that is lower than the average in society, then we'll try to make adjustments. We don't need to spend all the $17 million. It's for the executive director of each division to decide. We need not use up the $17 million. Well, after offering a special pay, that staff member may still get the annual increment, right? Yes. Now, your suggestion is feasible. You asked whether or not we should purchase our own property. Well, we'll definitely study that option. And whether or not we can relocate certain tasks to outside Central District, we'll certainly study that. As I said, by 2017, we'll have an opportunity to effect a change. Well, the SFC is ever increasing its manpower level. At the moment, it's 800. It's quite a huge number. I'd like to know, in the past 6 years, how many more employees have you recruited since 2009? Now, first of all, for this year's budget is 39, the lowest in the past few years. As for the increased number of employees, by the end of 2016, 891. 852 by the end of this year, and then 794, and then 736 and 648. So you can do the subtraction, then you see the increase. So for this year, the increase is 39, the lowest in the past few years. In 2011, it's 648. Now 2016, 891. Well, quite a huge increase. Will that be the trend, or have you more or less stabilized? Well, I think at the moment, we just reached the saturation point. We have sufficient hands to do our work. Well, unless extra duties are added to us, we won't need any more manpower. Maybe Mr. Older can supplement.
Yeah, sure. Yeah, I think, as the chairman said, the increase this year is less than in some recent previous years. Having said that, the increase over the last 5 years in headcount, to be plain, has been 52%. And we think that that has been absolutely necessary to properly regulate what has been a growing market. In the same period of 5 years, market capitalization has increased by 129%. And the number of IPO applications we look at has increased by 116%. I could go on with more statistics, but basically the market is much, much bigger and has grown more than our headcount has grown. That's the reality. So we try to deal with that and the fact that the size of the market places demands on our people, obviously with a conservative approach. So we think that this year, with the additional 39, which are by and large spread between enforcement and intermediaries, as you can see from the budget, that gets us to a stage where we're just about right, subject, as the chairman says, to any exigencies going forwards, any special new demands on the Commission. But we don't see any of those in the immediate horizon right now. Yeah.
我再想問個問題就係話咧，嗱，而家經常都係。
Now I have another question. After the Lehman Brothers incident, it has been tough for sales, but at the same time, the cost has continued to increase. Well, very often we heard about the over-regulation of the SFC on SMEs and the approach towards larger corporations being too relaxed. So how can you strike a balance to prevent over-regulation? What is your view on this? Well, let me briefly say something about that, and then I will ask Mr. Alder to supplement. We do not target SMEs. We do not over-regulate them. Hong Kong is an international financial center. The majority of our investors, as far as our market is concerned, are major corporations. It is this group that affects the markets the most. So our concern is to base our work on the international demand rather than targeting smaller brokers. That is why we impose the suitable level of regulation. Mr. Alder may supplement.
Actually, if you look at the effort that we put in over the last year in 2014 to industry segments, we've had a very, very clear emphasis on larger organizations, in particular global banks operating in the securities field. Towards the middle of the year, or just after the middle of the year, we had a session which was attended by about 200 representatives of that side of town, where we went through inspection findings over the last 2 years, and we were very, very clear that many of those inspection findings demonstrated that internal controls, etc., in those large organizations were not satisfactory. So we have a very clear emphasis on the larger end of town, as it were. Now, so far as the smaller brokers is concerned, what we have to do and what we do is adopt a level playing field approach. So that's the reality of what we do. And then finally, in relation to another aspect of regulation, or is to do with product approval and similar. As I think you know, we've cut down the sort of target time that we are aimed for product approval to 6 months. The average for product approval has dropped below that 6 months in any event. And what we need to do is to continue working with the industry, so both of us understand how to move forward, but bearing in mind that the number one goal is investor protection.
Yeah. Thank you.
All right, we have Mr. Sin Chung Kai waiting for a third round. I am going to extend the meeting by 15 minutes. 4 minutes for you, Mr. Sin Chung Kai. A simple question on ELAS again. Just now, I thank the CEO for giving me some figures on the number of complaints, and I welcome that. And please supply me with the number of complaints in the past 2 years. As far as banks are concerned, when they sell investment products, they have audio recordings, they have internal control, and the recordings can be played back. In future, the IIA will be responsible for issuing licenses and regulating intermediaries. Now, I don't know in terms of division of work what the SFC can do. In future, if in the event of selling ELAS products, will there be requirements similar to those imposed on banks? For example, there will be audio recordings for inspection. If there are no such requirements, in future, if this work will come solely under the IIA, then of course, if this is only about insurance product related products, then that's no problem. What if the products are also investment related? These products may seem to be relevant to SFC as well. So can you give us more details or explain more clearly whether there be a clear consensus? Yes, Mr. Tong. I think I'll defer to Mr. Alder.
I mean, it's, on that point, the current regulatory structure is, I think, as you know, that the SFC does not regulate because they just don't fall within our legal jurisdiction, either the agents or the brokers who are selling ILAS or insurance products. And clearly the bank route is regulated by the HKMA. That's the current situation. From where I sit right now, I do not know whether that's going to change in the future. However, if it's the case that there is still a large investment component to an ILAS product, which is likely to be the case, and if it's the case that the regulation of the brokers and agents fall under the investment authority, the insurance authority, clearly we would need to have a close collaboration with the insurance authority to deal with any aspects that involve more of an investment aspect than an insurance aspect. That would have to happen if there were, for the two regulators, if that's where the if it's the insurance authority that regulate the point of sale.
我想問下局方咧，有咩工作你可以做到咧？將來咧就係。
Well, my question is whether you have any measure to tackle that. I mean, if the product is only related to insurance, then it's okay that it comes under the IIA. But sometimes, if the product is investment related, now you have three authorities: the SFC, the Hong Kong MA regulating banks, and also the proposed IIA. And what can be done to ensure that the level of regulation would be more or less the same among the three authorities? In fact, this is what we're doing already. I believe we will continue to provide a platform for the relevant authorities to maintain the same level of regulation. Now, as you know, recently, in relation to approval of products, upstream in terms of product design, we are already facilitating the work of the three regulatory bodies, the Hong Kong MA, the IIA, and the SFC. In terms of product design, we have imposed a stricter requirement recently. So in 2015, what products can be launched? And recently, the three regulatory bodies have also reached a consensus on product design so as to give adequate protection to investors, so that when the product is launched in the market, there will be adequate protection for investors. This is what we regard as of utmost importance. In future, we will continue with the coordination work, even after the setting up of the independent insurance authority. If the product is related to investment, I believe the SFC will have a role to play in the approval process, and will continue to coordinate among the regulatory bodies. At the retail point, of course, we also do coordination. After the IRA is set up in future, we'll continue to be the coordinator and to facilitate communication among the regulatory bodies. And as said just now, if the signing of MOU is required, I think this is also an option that we can consider to facilitate communication and also to ensure the same level of regulation among them. Well, let me supplement. In the past year, the SFC, Hong Kong MA, and the OCI has done a lot in terms of ILAS products. Now, in fact, for the sale of ILAS products, audio recordings will also be required. Otherwise, staff would be deployed to call the client and ask if he understands the product, and also to inform them of a number of points to note, including the tenancy of the product, etc. And there will be major changes, as Ms. Yan just now said. So let me reassure Mr. Sin that there will be changes. But whether or which regulatory body should be responsible for overseeing investment-related and insurance-related products. I think this should come under the IIA. In terms of product knowledge and the selling practices, my personal view is that the IIA will be in a more appropriate position in overseeing such products. Yes, Ms. Yen, let me say a few words as well, because this today is about the SFC's budget. I thank members for your views just now, because we are in the process of approving the budget, and the budget will also be tabled in LegCo. The views expressed today are very useful, and members have pointed out that there will continue to be a deficit in the SFC's budget. And just now, some members also suggested how we could control expenditure and increase our revenue. And with increase in international requirements and the scale of our market, there is a need to increase manpower for SFC, and in terms of the mode of operation and cost effectiveness and optimizing the use of existing resources, we're also very concerned whether they're able to optimize the use of existing resources, including how to better make use of their reserve. For example, some members suggested whether in terms of office accommodation, something could be done to make better use of the reserve. And just now, some members noted the development of local market, in particular after the establishment of the Stock Connect. And as what was said this morning, the implementation has been smooth, and we're still monitoring the market's development. Apart from looking at the transaction volume, we see that a lot of institutional investors have expressed interest in setting up, say, retirement funds in Hong Kong, and when they consider wealth management or asset management, they consider setting up such funds in Hong Kong. And this may not be reflected in the transaction volume daily under Stock Connect, but we have to take a holistic view in considering the benefits that will be brought to Hong Kong by this Stock Connect, and how we can better use the advantages we have under Stock Connect. Well, thank you. That's the end of this item. I thank Mr. Tong, Mr. Alder, and Ms. Yan for attending the meeting. You may be excused. Final item, any other business? If there's nothing under AOB, then thank you.